All right, looking good over here. Says we're live, so let's go ahead and get it started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is Sunday, October 10th, 2021, 8 p.m. Eastern Standard Time. I'm going to jump in and take a look at some assets. Like we always do, we will talk a little bit about the macro and micro factors, what's going on in the economy and around the world currently, and how those things can have big effects on trends, so that we can get ahead of those trends and make sure that we capitalize on the gains. Obviously, quite a bit going on, and we are starting to see what is looking more and more like reversals taking place in these markets. Many of these reversals have been taking place over the last couple months, and we have been prepared for them, anticipating them, specifically spoken about them, and now they're coming to fruition, and now everyone is talking about all these things. So we'll get into a little bit of the macro on that stuff, and then we can kind of like jump in, talk about what we think is going to actually happen, how it's going to affect what's going on in the world. So first and foremost, let's go ahead and let's get back to our more traditional start, and let's take a look at the TNX, the 10-year Treasury yield, and see what's going on here. So let's start with our big picture, and then we can kind of zoom into what's taking place here. So obviously on the monthly, we have a massive downtrend, been going on for what amounts to like 40 years, been below the 200 exponential and simple in a powerful downtrend. Many times along the way, we have retested specifically the 200 exponential and simple. Every time we have failed to get above those. So it goes without saying that the longer we're underneath this, the more likely we are, without a test, the more likely we are to come back up and test it again. So our last test was in 2018. Now, what else can we see that's taking place on this chart? Well, obviously it's all red. You know, that's what we want to see in a downtrend. Helps us to keep everything in perspective. We're clearly in a downtrend, and then throughout that downtrend, we see a couple little bursts of, what amounts to like a micro uptrend inside of it. And now what we see here happening is each time that's bottoming out, we're in the bearish control zone, we get the hard buy signal. The bright green shows up here, and then eventually we get a little pop up and then we get rejected. Well, as that takes place, we see our momentum start to pick up where the slope line flips over blue, and that will often correspond to one of those moves to the upside, which, again, eventually gets rejected. So now here we are at a key transition period, because the last time that we had that signature show up, we were in the bearish control zone just for a moment here. We got the hard buy signal, and then we went into what amounted to November 2016 to November 2018. Yields rose for 2 years and then got rejected off the 200 exponential and simple. Here we see the hard buy signal here at the bottom, and then we get the cross between the 8 and 21. And now here we could potentially expect from October, really September 2021, potentially a 2-year uptrend in yields. Would that make sense in the macro environment? Yeah, it probably would, honestly. With everything going on, I think it's very likely. So here we are getting ready to potentially retest this key area here at 1.7. So, obviously we had what amounted to that left shoulder neckline, the head, and then we came back up and put in a slightly lower neckline top right here, and we're coming back up to test that. If we break through that level, around here, or depending if you put like a descending slope line on it, if we break through that level, the measured move would give us an aggressive move back up, which would be the retest of the 200 exponential and simple. So again, that would line up on the macro with everything we've seen take place every time. We also know that once we get a bunch of green histograms below the zero line, we cross over the red slope line here, we cross over the zero line, we're beginning to start into an uptrend. And while we can temporarily have pullbacks along the way, this is telling us that we are entering into an uptrend. Coming out of the bearish control zone with a hard buy signal, obviously a very powerful uptrend on the stochastics as well. And here we saw some resistance on our initial push up as we were preparing to enter into the bullish control zone. Typically after we enter into the bullish control zone, we'll get some continuation, but it's telling us that we're already at like higher levels and probably going to top within the next few months. So the fact that we moved all the way up to the bullish control zone and then came down to recharge, and now it looks like we're moving back to the upside, tells us that we're basically just refueling the jet, getting ready to take off. So that's what I'm seeing happening here on the yields. Now, if we go to the weekly chart, why did we run into resistance right there? Well, we ran into resistance at the 200 exponential. So if we run into resistance at 200 exponential, we expect a pullback. We pull back, we expect to see a higher low, and then we come back to retest it again. And just like we always talk about, trying to punch through drywall, you're probably not going to punch through it on the first punch, but you're going to weaken it, and you're going to crack it, and then you're going to put a small hole in it, and the next thing you know, you're breaking through it. And that's what the price action is doing with the 200 moving average right now. Every time we hit it, we're more likely to break through it, especially if we consistently put in higher lows. So now here we are again, retesting that 200 exponential on the weekly. So when this opens up tomorrow, what's going to happen? Is it going to have a little sell off again and potentially put in a higher low? Is it just going to burst through it and test the 200 simple? Well, I mean, your guess is as good as mine, but I know we're at a critical level here. Now, if we look at our oscillator indicators down here, the TJD, TDMACD, the slope line is still blue. We're below the slope line. We're seeing all green histograms, but typically when we come up to that, if it's still blue, it will be a rejection. So we're at a key resistance. We have the moving average resistance, we have the slope line resistance, and then potentially on the stochastics, we would have the bullish control zone potential resistance. But it's telling us that, after we get that 821 cross, it would not be unrealistic that even though there's still drywall ahead of us, that this time when we go to punch that drywall, our fist might go right through it. So paying attention very closely to the 1.9 on the weekly. And then if we just switch over to the daily, and, we can see obviously what's taking place. We were in a long downtrend. We crossed back over the 200 exponential and simple, entered into a daily bull trend. That was we confirmed that bull trend back in January. So this entire year, we have been bullish on the Treasury while everybody else, was saying, oh, they're going to zero. They can't go up. They'll never go up. And then up here at the top, everybody's saying they're going to 1 million. They're going up forever. And now it's, oh, no, they can't go up any further. Well, they're going up further. They're going up further. We're starting to weaken here at the top, but only because we're running into that resistance. But when we flip over and we take a look at our drawing tools here, we can see what's really taking place. This blue is the resistance neckline of our inverted head and shoulders. Okay, so we're back to retesting that. We're at that neckline again on price action. And if we break through that, we're going to get the measured move of the head and shoulders, which is the measure from the head to the neckline, which is our green arrow right here. So if we get that measure move breakout, where's that going to take us up to? Somewhere around like 3%, the top of the range. So our first initial target is a small target up here at like 1.8, but the actual target for this is up near like 3%. So what is that going to do? If from where we're at right now, like a 1.6, what is that going to do to risk on assets? What is that going to do to people's ability to borrow money? Because that's what this is really all about. That's why we look at this. This is the cost of money. What is money worth to borrow? If you loan somebody your money, what are you going to get for it? So that's, as this goes up only, from 1.6 to say 3, it's going up 1.4%. Oh, that's not much, but it's doubling. The price of money doubles. Therefore, in order to make money off of that money that you've borrowed, off of that principal, you need to have an investment that's going to make you twice as much, or alternatively, you're going to make half as much on that investment. So it's very, very important how this effect can be exponentially important on what markets do. And that's everywhere. That's real estate, that's cars, that's bonds, that's, stock market, that's cryptocurrency, that's everything. Very, very important we pay attention to that. And now we see also, alternatively, if you don't like that inverted head and shoulders pattern we're paying attention to, this is very clearly our rounding bottom cup right here. And then we have a smaller, handle. So that's our cup and handle pattern. And again, the measure move would take us to the same place. So we have two potential validation targets. we've already broken out of potentially, our initial move up with the little move here and validated the cup. And now we're just at resistance. So are we just going to burst through this and continue to the upside? No, we're probably going to run into some resistance here, consolidate for a bit, maybe pull back. That's all fine. Is it possible we just burst to the upside right here? It definitely is. But this is very, very important. And this one chart tells us everything else and why we're seeing and what we're potentially seeing in the future. So this chart alone tells me that money is going to get expensive very soon. The cost of money is going way up. It's going to double. So if the cost of money doubles, what does that mean? It means probably some of the macro effects that we're seeing are going to take place. Well, is the Fed going to be potentially tapering purchases? Well, yeah, supposedly. Is the Fed going to be potentially reducing their balance sheet over the next couple of years? Yeah, potentially. Is the Fed going to raise the Fed fund rate eventually? Yeah, potentially. All those things would literally validate what we're seeing here in this chart. It's already telling us that's going to happen, that these things are going to happen and they're going to happen over the next couple of years. So it's very important that we see what we're expecting through the fundamentals and what we're being told. Well, the chart's already telling us that, and it has been telling us that for a while. Is it possible that changes? Is it possible this fails? Is it possible there's a world war? Is it possible an asteroid hits the earth? Sure, anything is possible. Nothing is 100% in these markets. But what they're telling us is there's a very, very high likelihood that this is going to be taking place exactly as we discussed. So alternatively, let's take a look at TLT and see. And so, for the record, what I'm getting at is that's telling us that prices of things are going to be going way down in the future. Over the next couple of years, things are going to be going down. So if something's going to happen for the next few years, it doesn't need to happen tomorrow. It doesn't need to happen this week or this month or even this year. Maybe it happens in 2022. Maybe it happens in 2023. But we're talking about a multi-year trend on something. Now, this is a counter trend move we're talking about. So it's not necessarily going to reverse a 40-year trend, but the likelihood of that happening now is more probable than ever. Because we all know this is an unsustainable situation the world's in and blah, 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 all that stuff. We all know that. Nobody needs to tell you that. But, is this going to be the first time when all these dudes who have been calling for a crash of the economic system for the last 20 years are going to be right? Sure. I mean, they're due. Clocks, broken clocks right twice a day. So maybe it's their time. But regardless, though, we need to be able to capitalize on this. So if we can anticipate in the future the cost of money is going to go up, that tells us that the price of assets, the value of assets or perceived value of assets is going to be going down. So that's a very important macro view that we need to be paying attention to. Now, within that macro view that things are going to be less expensive in the future, speculative assets and whatnot, houses included, cars included, stocks, cryptos, whatever. There's going to be counter trend opportunities within that. So does that mean everything's going to cost us in the future? No. Probably things like energy that are scarce because of stupid policies, man-made policies. The green initiative, we need more green energy, even though it costs exponentially more, but then people use less of it. So then it's better for the earth, but it's worse for humanity because you won't be able to afford, energy. Same with food. We need to overregulate all this stuff, but now there's food shortages all over. And it's well, why is there all these food shortages? Well, there's too much regulation, so we can't make enough food or, whatever the situation is. So there's micro, trends inside of the macro trend. So when I say that everything's going to be cheaper in the future, I don't mean water is going to be cheaper in the future. I don't mean coal or gasoline is going to be cheaper in the future necessarily. I just mean overall, net things are going to cost less in the future, which obviously fits into our macro, deflationary trend, which again brings us way back to something that I was talking about years ago, well, not years, a couple years, when this whole crash happened, that we were going through a macro deflationary period, and it was going to affect everything into the future. And that the Fed and all these policies, everything that all these central banks were doing was not in fact to fight inflation. It was to fight deflation. They were causing inflation to try and fight the deflation that was happening on the macro. So imagine if the Fed and the central banks and everything didn't step in, okay? And, everybody stayed home. The government told you couldn't do this. They closed down everything. Everybody had to go home, and they didn't just pump out a bunch of money. People would be struggling. They wouldn't have any money. Businesses would go under. People wouldn't be able to buy things. They'd be trying to sell off all their assets, because they're trying to feed their family or pay their rent or whatever. People would be getting kicked out on the street. Prices would adjust for like rent and stuff like that. So the more the government intervenes, the more they actually like exacerbate a lot of these problems. Like, on the macro effect, the more regulations we have, the less the free market operates. So you could say that with anything. You could say that with medical field. And how are the prices of medical, gone up exponentially in the United States over the last few years? How have the prices of, college gone up over the last few years? And then what ends up happening? You have a bunch of people with a bunch of debt and a useless degree. Well, the more the government keeps intervening in these things, and now they're going to, we're going to privatize, childcare. So then all these mothers can go back to work because they couldn't work because, what was going on before? Everything was fine before. And then, you lock down the economy, put all these companies out of business. Then they can't open back up because all these people got all this free money. So now they don't want to go back to their shitty job where they take care of your kids. You don't want to take care of your own kids. That's why you send them to childcare. But you don't have a choice now because you don't make enough money at your actual job or career or whatever to take care of your own kids, to pay somebody else to take care of your kids. Well, the free market is getting interrupted over and over again. So we have to pay attention to this and understand that any government policy, any change in what's going on in the world can affect any of these macro or micro trends. But overall, what we're going to see is along these same lines. So that's why it's so important to understand that there can be small effects. And anyone with certainty, like speaking in certainty in these markets, is an idiot because you can't know with certainty because literally anything could change tomorrow. So the most important thing to pay attention to is the overall trend, the likelihood of that trend, and then, be able to anticipate how that's going to benefit you, but also to understand, what has to happen for you to be wrong. So here, if we look at the treasuries, the actual treasuries on the daily, this is our 20-year treasury. What happened? Well, we went absolutely parabolic, which we have been going parabolic. We've been in like a 40-year bond bull market. And then we broke down below the 200 exponential and simple on the daily, came back up for the retest, and that failed. The retest failed. We tried to get back above them and continue the trend to the upside, and it failed. We broke down below them now. We're selling off. The 200 exponential and 200 simple have rolled over. So we're going back into that downtrend. The downtrend is going to resume, which obviously, on our drawing tools here, we've had in place this head and shoulders pattern. We peaked out with our right shoulder here, and now we're coming back down to the neckline. When we get back down to the neckline, assuming that breaks and the head and shoulders pattern is correct, we would expect a measure move. Breakdown of the pattern, telling us that the bond prices are going to be less, therefore the yields you get on those bonds will be more. And that's irrespective of what the Fed does with the Fed's funds rate, and changes. The bond market does its own thing regardless. They can affect it by buying bonds. They can affect it by all these other things. But in the end, the market, the free market still will fight the trend of, the manipulator. So we can continue to use government, like fiscal and monetary policies to try to manipulate things. But in the end, the market will still make its own mind up. So the Fed can choose not to raise the Fed funds rate. But alternatively, the market can decide that the rate that the bonds pay in relation to their price, aka the treasury yields, are going to go up by selling off bonds, or vice versa. You know what I mean? People can decide they want to buy more bonds, so therefore the rates would go down. But they can only affect the market so much by their decisions, by their policies, etc. Eventually the market will do what the market wants to do. So here on the weekly, we have a macro bull trend coming back down. We are at the 200 exponential now. The first time we came down to it, we broke down from it. We found support at the 200 simple. So now we want to see what happens here. If we find support at the 200 exponential, we continue to the upside. That's great for an uptrend. If we break down to the 200 simple again, it's worse because the more times we come and we punch that drywall, the more likely we are to fall through it. So again, we are seeing some uptrending characteristics here. We are seeing some topping signatures here as well. We are at support. This is obviously the inverse of our other chart, but we're definitely seeing some big time warning signs. And what is this right here on the macro? It's very easy to see. Green is the uptrend, red is the downtrend. When we break down, we come back up, we retest it, we fail to flip it back over, and then we see continuation to the downside. Here we break down, we retest it, continuation to the downside. Here we break down, we retest it and recapture the uptrend, but then we see continuation back down to a double bottom. We see it over and over again, same patterns, the same things. So is it possible this time when we break down, we're going to come down and retest the 200 exponential and simple? Definitely a possibility. But on the macro here, on this 1 month chart, what are we seeing? We saw a dead cat bounce off of the bearish control zone. So the market attempted to step in and stop the bears from being able to take control using our stochastic indicator here. So we saw an initial bounce, but it's a weak bounce. Came back up and then got rejected. So now our moving averages are telling us continuation. Our rejection here is telling us could go either way. But now here on the TJD, TDMACD, we're seeing a bunch of red histograms break down below the slope line. We spent enough time below the slope line, below the zero line, that now our trend has flipped over bearish. We have a red slope line on the TJD, TDMACD, slope. So what is that telling us? We're going into a, every other time that's happened, it flips over red here. We go into a downtrend, put in a new low. You can, depending on which one you're looking at, longer or shorter term, we end up flipping down. When it flips blue and we're still underneath it, it typically gets rejected. So we see this rejection lines up with our moving averages, lines up with the slope line rejection. So you look at this as basically just one long downtrend. So that's potentially, what we're expecting to happen right here. So again, yields probably going up, bonds probably going down. What does that tell us about the market? What does that tell us about what's going to likely happen, in the overall environment? And why is that important to us? Well, it's important to us because we need to protect our capital. We need to retain our principal, our buying power. And the reason that everyone, now we're going to transition into the dollar and why this is so freaking important right now. The reason that everyone fled from dollars, fled from whatever your currency is, and ran out and bought stocks and cryptos and stocked up on food and water and bought houses and cars, and we pulled forward all this demand from the future. Why did everyone pull it forward? Because we were convinced that everything was going to be more expensive in the future. Everything is going to cost more in the future. So if you buy it now, you can get the most you'll ever be able to get for your money. Because from now on, every time you go to buy that same good in the future, you're going to get less for your money, or it's going to cost more money and you'll get the same amount, however you want to look at it. So we basically bought into a narrative to hurry up and spend your money. So everybody went out and spent all their money. Then we had all this fiscal and monetary policy from governments around the world, PPP protection. We had, unemployment benefits. We had pandemic benefits. We had, stimulus checks. We had, rent moratoriums, mortgage moratoriums. We had all kinds of things that basically incentivized people to go out and spend money. It either gave them extra money, it let them keep the money that they would normally spend on key things like rent or mortgages, made super cheap money with interest rates. We pulled forward tons and tons and tons of demand from the future. So people went out and bought goods. They went out and bought, food, and they went out and bought, handy wipes and cleaning supplies, and they built decks on their houses, and they renovated their kitchens, and they bought, new appliances and cars and houses and stocks and cryptos and all this stuff. Everybody went out and spent everything, convinced that it was going to cost more in the future. So we pulled forward all that demand, because normally people are going to buy cars. People are going to buy houses. People are going to build decks. People are going to buy food. They're going to buy cleaning supplies. They're already going to do all that stuff, but they're only going to buy so much. So if you run out and buy it now, you're stocked up. You got a bunch. You're good. You don't need to buy that again for a while until you run out, or until you need a new car because that one broke down. Well, a lot of these trends are things that you only need to buy, once a year, or once every 5 years, or every 10 years, or a house might be once every 30 years, or maybe once in a lifetime. Depending where you live and the average turnover rate and everything, if we pulled forward all this demand from the future, what's going to happen next year? You're going to go out and buy another car? You're going to buy a new house next year? You're going to put another deck on your house? You're going to redo your kitchen? You're going to stock up on more food if you got 3 years worth of food because you're a prepper? No, you're not going to buy those things. We pulled forward all this demand. So we basically tried to simulate a strong economy. And in the numbers, the economy looked okay. Doesn't even look that good. So we pull forward all this demand and the economy just looks okay. So what's going to happen in the future? The Fed or central banks all over, the governments all over, have intervened hardcore in what would have been a crash. At least a temporary crash. Maybe it wouldn't have been that bad if we didn't have restrictions that shut down all these businesses. Maybe more people would have died because, the pandemic. We can only hypothetically talk about these things. But the fact of the matter is we pulled forward a ton of demand that's no longer going to be there in the future. So now eventually what's going to happen? The market is going to revert to the mean. It's going to move back. It's going to do what it was going to do, but it's going to do it now from a higher level, higher prices, more expensive areas. So when we're going to see a more violent move in the opposite direction. So we need to be very careful of that. So going back to what we were talking about here, the dollar, everybody was so convinced the dollar was going to zero. You weren't going to buy anything in the future. The dollar was going to crash. Your currency, wherever you live, was going to be worth nothing. Hurry up, buy things because you'll never be able to afford them in the future. They're going to be so expensive, you'll never be able to afford them. You're going to need a wheelbarrow to go buy bread. And now here we are looking at this chart. And what's going on with the DXY? Well, it topped out back here on the daily in March of 2020. Okay. That makes sense. What was happening before that? Oh, it was already in an uptrend from April of 2018. So we were in an uptrend, and then, we get basically the roan comes in, and then the world says, oh, dollars are going to be worth nothing. Everything's going to be crashed. There's going to be inflation. It's going to be horrible. Everything's going to cost so much in the future. So what happened then? We went into a bear market for the last year. And now what's happening again? We're transitioning back into the bull market, off of a double bottom, off of a higher low from the last low. So we had a bear market before that. Then we had a bull market. Then we had a bear market to a higher low, telling us what's going on here. We have a bullish uptrend taking place in the dollar. Now, this is not the dollar in relation to assets, which was what we were just looking at. This is the dollar in relation to, other world economies, like, their value buying power, spending power of their dollars. So what is this telling us? This right here is telling us if the dollar is going to go into a macro uptrend, it means that people are going to want dollars. Well, why are people going to want dollars? And why is this relationship to what's happening in Canada, Europe, England, whatever? Why is this so important? It's telling us that whatever takes place on the macro is going to affect these other countries worse than it's going to affect the USA. Is it because of policy? Is it because, whatever? Is it because, who knows? But the fact of the matter is, this chart is telling us that whatever happens, whatever the next portion of this trend, whatever the next, thing that we see take place around the world, it's telling us that the dollar is going to strengthen in comparison to these other currencies in the basket. So, just the top three we're paying attention to, let's say, the Canadian dollar, the British pound, and the euro. So that's important to know because then it tells us where do we want to put our money. We want to put it either in the dollar or we want to put it in, American assets. So that's just giving us another piece of the pie. Now, again, any one of these little pieces can shift and something could change. But what we're seeing right here tells us, once again, on the macro trend, what we need to pay attention to. And when we break this down and we look at this weekly, now we're looking at the weekly trend. Well, what did we just see happen? We saw that there was a downtrend, then an uptrend, then we went into a downtrend, and then it looked like we're going back into an uptrend. Well, we started in this downtrend back in 2002. So, that was what, 2000 tech, tech sell-off? Well, why is this so important and why does this trend matter? Well, in 2000, the tech bubble, who has all the tech companies? United States. So why did the United States dollar drop? Because tech got absolutely crushed. So that tells us why we went into a long bear market in the dollar. You can say this is the cause, that's the effect, etc. But the fact is we're comparing like the actual trend. So we saw that crash take place. And then what happens right here? 2005, we go in an uptrend right here. And then 2008, we bottom right here. What happens in 2008? That's the mortgage crisis. That was when the mortgage crashed. So this is our tech bubble downtrend. And it ends when, the mortgage bubble crashes. And then at that point in time, we started back into, a bottoming pattern, crossed back over the 200 exponential and simple, and then entered into a bull market. So essentially, we confirmed a bull market somewhere around like 2012, and the dollar has been in a bull market since. Now, we broke down here below the 200 exponential and simple, and now we're trying to reclaim that area. It is very possible that I'm wrong about what I think is going to take place, and that the dollar actually gets rejected here and then goes back into a bear market. It's definitely a possibility that happens. Anything is a possibility. I hear way too many people, technical analysts, fundamental analysts, random talking heads, speaking with certainty about what will happen in the future. The future is completely uncertain. Markets will always do what they want to do based on supply and demand. You can only prolong those things with policies and manipulation. The fact of the matter is, I could 100% be wrong. So what do I need to pay attention to? I need to pay attention to how I determine what's likely to happen and why, based on actual like math and science and consistency, not just like a feeling in my heart or anything like that. So what am I seeing right here? I'm seeing a big push down here, and then I'm seeing a smaller push down here. A big push down here, and then smaller or same push down here. And then I'm seeing a smaller push down here, and again, a smaller push down here. And what am I seeing in price action? I'm seeing a low here, a much lower low here, and then I'm seeing essentially the same low here. So I'm seeing triple bullish divergence right here, followed by a move to the upside. And then pattern-wise, what am I seeing right here? I'm seeing a W pattern, a double bottom, okay? And what happens once we break through the top of the V that connects the two V's together? Well, that's like our neckline, and then we would expect to get the measure move. So what happens then? We break up here, we consolidate for a bit, and then we get another push up. Now here we are at the 200 exponential and simple at resistance. So is it possible, and look, this was support all through this area here. It was resistance through this area, We broke through it. It acted as support again, came down to it nearly here, came down to it, acted as resistance once we were below it. Couldn't even quite get up to it, and now here we are back at it. So is it possible we break through this? Is it possible we get rejected here? Either of those is 100% a possibility. We just need to look at the likelihood, what's likely to happen. And when we look really, really close here, what we can see happen is, on this weekly chart, we actually, even though we're still below it or at this level, we actually flipped the slope line on the 200 exponential back over blue. The slope line on the 200 simple is already blue. So at this point in time, you could argue we're basically neutral at a neutral zone, and the market is deciding, okay, are we going to start trending back down right here? Or are we going to break through this and start trending back up right here? So now we know on the shorter time frames it's bullish. We know on this time frame it was looking bearish because we were below it and retesting it as resistance, but now it looks neutral to me. So now let's switch over to the monthly and see, what is this telling us? Well, on the monthly, we're getting a completely different picture, because here we have a high, here we have a lower high, here we have a low, here we have a lower low, and then we came back up for another lower high. So we have a series of lower highs. We have a series, or at least two reference points of lower lows. So you would say, going back to the 1980s, the dollar is in a downtrend in comparison to this basket of currencies, the euro, the Canadian dollar, the gold British pound. Okay, so the dollar has been losing strength compared to these, which you would expect. Obviously, if we're the world reserve currency, we need to export dollars to other countries because we're sacrificing our ability to manufacture goods in order to manufacture dollars. So we manufacture dollars, but then we have to buy those goods from somewhere else because we're manufacturing dollars instead of goods. So that makes perfect sense for the macro of what we're seeing on this chart here. But now what we're paying attention to is what happened here for the first time in 2014. We got above the 200 exponential moving average again. What happened right here in 2015? Above the 200 simple. What happened right here in 2018? We retested the 200 exponential and simple and found support. Continued to the upside. We did put in a lower high. So is that a macro lower high or is it a micro lower high? Well, you could argue that this is just the first lower high before we break through. Because here we have, a high here. We come up, put in a higher low, and then we put in a lower high. And then we break down and put in another higher low. And then eventually we break through that. So we have to pay attention. We won't know for sure until we either take out this high right here and move to the upside, or we take out this low right here and move to the downside. So right now you could argue that this is a neutral pattern taking place based on just highs and lows. So now if we have moved above the 200 exponential on this retest here, and we don't come down to the 200 simple, and the slope line has flipped over blue on both of these, that tells me we're bullish. On a monthly chart, this is very, very bullish. So we have a higher low or series of higher lows. We are above the 200 exponential and simple moving average, and now they have a slope to the upside. And now here we are above the 8 and 21, and they are preparing to cross to the upside. So we're running into some resistance right here, but we're likely to see a trend like this take place where it lasts, essentially from what? September 2018 until it crosses back to the downside, July 2020. So a couple of years of upside potential. But that's on top of us now confirming a macro trend on the monthly for the first time. And how long were we bearish on this trend for? Well, from 2003 until we confirmed technically the trend, being above the 200 exponential and simple and both having a slope to the upside. So we have a 17-year downtrend that we are broken out of. So now are we going to go 17 years bullish? Are we going to go 5 years bullish? Are we going to go 3 years bullish? Is it going to fail and we go bearish again? Who knows? We don't know. But we have a pretty good idea. And then if we look down here at our indicator oscillator, we see a low. We see the same low right here. We see a low here. We see a higher low right here. That is bullish divergence taking place. Here we see on the stochastics a low. We see a lower low here on the stochastics. Here we see that same low and then a higher low here. Again, bullish divergence taking place. So we have bullish divergence after a long bear market downtrend on top of the 200 exponential and simple moving average with a positive slope to the upside. We're coming out of the bearish control zone with a hard buy signal, and we're above all of our moving averages. And we have this bullish divergence, and we're getting ready to break above, potentially, bunch of green histograms getting ready to break above the slope line and potentially above the zero line. So again, tells me if I'm going to have any currency in the future for the next couple years or decades or whatever, what do I want that currency to be denominated in? Dollars. Well, why does that make sense in the broad scope of things? We've had this dollar denominated debt all over the world, and not even just dollars like you owe the USA money, but we have basically like the whole euro dollar system and everything. We have Chinese debt denominated in dollars. We have all kinds of debt all over the world denominated in dollars that was not issued by the United States. So it's not even just like all these people owe money to the United States so they can just be like, oh, we're not going to pay you, F you. They still need to settle that debt either within their own country or to other countries that's denominated in dollars. Therefore, if you want to get out of debt, if you want to pay off your credit card, before you pay off your credit card, say you made a bunch of money in crypto. You can't just say, hey, Visa, I'm going to pay you off. Here's some Bitcoin. Here, I'm going to send you some Doge coins. Hey, I just crushed it on Shiba Inu. So what's your address? I'm going to send over some Shiba Inu coins and pay off my debt to you. Oh, no, we don't take that. Your debt's in dollars. You pay it in fucking dollars. So go to your bank and get dollars and then bring the dollars to us and you settle your debt. And that's how you settle debt. That's how you pay off debt, is in what currency it was denominated in. If I borrow 1 cow from you and I say, hey man, I need a cow. And you say, okay, cool. Just pay me back 1 cow in the future plus 1 chicken interest. And you're like, okay, great. I will pay you 1 cow and then the interest will be 1 chicken and I will pay you that as well. And we say, deal, and shake hands. You can't come back to me later and say, hey man, here's 23 chickens. That's not what the deal was. That's not what the contract was. That's not what the debt was denominated in. You owe me 1 cow and 1 chicken interest. So you go and you trade those chickens. Maybe the going rate for chicken to cows is only 10 chickens per cow. So it's a great deal. You just go out, you trade the chickens for a cow, you bring back the 10 chickens you owe me for the cow, and then the 1 chicken interest, and then bam, we're good. So that's why this demand that we might see here in the future, maybe the dollar does collapse. Maybe the world goes on to the XRP standard, and everybody wants to just load up on XRPs, and it's the new world reserve currency. Maybe it's Shiba Inu coin. I mean, I don't know. I can't see the future. I don't know what it's going to be. Maybe it's going to be gold and silver. Maybe it's going to be seashells. Okay? Maybe we're going to trade in human teeth. I don't know what is going to happen in the future. What I do know is what these charts are telling us. And what this chart is telling us is that there's going to be a massive, bull run in dollars where people want dollars to pay off their debt. So is this because the euro dollar slash dollar system is collapsing and people want out of it and they're settling their debt so they can get out of it? What if you had credit card debt forever and you hate it? You hate having all this credit card debt and you've been underwater in it for years and you're paying ridiculous interest and all you want is to just get out from underneath these credit cards. You go out, you get the money, you pay off your credit cards, and then you say, never again will I ever borrow from a credit card company. And you cut them up and that's it. So maybe that's the world telling us they want out from the US's thumb. They don't want to be a part of this system anymore. They don't want to do this anymore. So they're going to go out, they're going to get all these dollars, and they're going to settle in dollars, and this system is going to crash. That is 100% a viable and I would say very likely possibility that in the future the United States loses its, stranglehold on the world and this Eurodollar slash globalized system. I totally 100% agree that that is a possibility. But before that happens, there has to be what amounts to a short squeeze or trend in the dollar and the strength of the dollar. And that's what I'm paying attention to. And that's why this is so important that I want to just keep reiterating on this, because people are getting caught up in this thing that it's like, well, no, people are tired of the US. They're tired of the dollar. It's not fair that you're not making anything and you're just buying our goods with your fake money and you're just printing it and it's a Ponzi scheme and we're done with it. And Russia's getting oil contracts and they're not denominating them in dollars and they're building pipelines and people are buying gold and the dollar's going to zero because we're tired of it and you're mean. Sure, that's totally fine. But the fact of the matter is before any of that takes place, this system that has been in place for, 50 or 100 or however many years you want to argue the various forms of this have been in place, whether it's from when we went off the gold standard or when we started making dollars or when the Federal Reserve, became a thing, whatever it is, you have to look at these trends. These are 50-year, 100-year, however many 100 years of the United States being a dynasty, like whatever. They don't just end in 2021 because you said so. It doesn't work like that. It takes time. In order to have a new system, we need to build a new system, and then we can transition from the old system to the new system. Which don't even get me started on that, because that's what's wrong with energy right now. That's why there's no energy, because everybody's trying to transition to this new green system, but there's no system in place. There is no green system. It doesn't work. We don't have enough energy from green sources that we can stop using oil or coal or nuclear. And yet here we are saying we're not going to use any more coal or nuclear. We're going to get rid of ICE, no more internal combustion engine because they're bad for the environment. And it's not fair because we're going to destroy the world. Sure, great. Let's build something that fucking works first, and then we'll use the thing that works. We'll get out all the kinks of the thing that works, the new thing, and then we can get rid of the old thing. But in the meantime, let's not just go back to the Stone Ages and have people freezing and starving to death because you feel bad about the energy consumption and it's not good for the environment. It doesn't make any sense. People are stupid as hell. And that's what I mean. You have to look at the long game and what it takes to get there. Build me a bridge across the mountain before you walk off the edge, and that's it. Now we're going to get into some technical analysis. Bubbly's with the popcorn. What's up, my brother? Good to see everybody. Hey, if you're in the, I see we got a couple of viewers over there. Chime in the chat. Say what's up. Make sure you give it a like, subscribe, all that good stuff. Been away quite a bit, says our Kits. This is the first night in quite a while I've been able to listen to you live. Fantastic information in the dollar. Yeah, man, I'm just seeing people are getting completely caught up in all these different little narratives, and a lot of them are correct. A lot of these narratives are correct, and I fully agree with many of them, but no one's giving you a time frame, and they're not giving you the road to get there. You know what I mean? And that's why it's so important. They're just talking about, well, the dollar's going to go away. Sure, I totally agree. No currency has ever lasted forever. So that is 100% a true statement based on history. But how long is it going to take and what has to happen before we ever get there? Nobody's talking about any of that stuff. Nobody's talking about any of that stuff. And it's so important. Maybe crypto is the future. Maybe we're all going to be paying for everything in XRPs. Sure. How do we get there? How do we get there? How do we get XRP to be the new currency? Because if you can't build me a bridge, if you can't draw me a plan on how we get there, then it's irrelevant at this point in time. Because it's probably so far in the future and unrealistic. All right, so let's look at the VIX. The same way everybody was saying, when I was saying there's going to be deflation, and the Fed is fighting the deflation, creating inflation to try to re-inflate the deflated bubble. And what happens when you do that, when you try to manipulate markets, it causes excesses in certain areas. So they were trying to fix the economy, and instead they caused an excess in the stock market, in housing, in, auto industry. But what did they do all that for? The whole thing was they were trying to fight deflation, and they caused inflation. So when everybody says, well, there's going to be inflation, sure, there's going to be some inflation in the meantime until the deflation kicks in and takes over, because the macro effect is the deflation. And now what is everybody talking about? Stagflation. So what is stagflation? Well, it's a stagnating economy with inflation in certain things, typically necessities. Well, stagflation, that's sort of like, now you're from like the inflation camp, and now you're moving kind of neutral. Now you're saying, okay, there's probably going to be some stagflation, which means the economy is going to do bad, but then there's stuff's going to cost more. Sure. What's the next step after that? You can get on my side. Then we get to deflation. Now we finally grind and we get there over years, and then we're in the deflation. So slowly but surely, the same way everybody was fighting me on every other macro thing we've talked about over the last couple of years that has slowly played out, and we've been completely right on. Slowly but surely, everybody, now they're getting in the stagflation camp. And then a year from now, we'll be doing this, and everybody will be talking about the deflation. And then, then we'll just, oh yeah, it's crazy. If only someone saw that coming. I mean, it's just reason. That's all it is. It's fact. It's based on history and what's going to happen. We don't even need to talk about it. If you charge people a ton of taxes, if you make it more expensive to have a business, what is the effect of that? You're going to have less businesses. So what makes things expensive? Regulation and taxes. So if we know they're going to increase regulation and taxes, we know for sure we're going to have less businesses. Easy. Sure. Of course. So that's deflation. So of course, 100%. I totally agree. Same with, and here's a specific example. Everybody saw that jobs number that just came out. And they were saying it's going to be 500,000. It's going to be 1 million. We're going to have so many jobs. We're going to have jobs coming out of every orifice on the whole goddamn world. There's going to be so many jobs. And then instead of 500,000, instead of 1 million, they get 200,000. Well, what happened? Where the jobs at? How come nobody going back to work? Well, when you make a bunch of rules that say you have to go get jabbed if you want to get a job, or if you want to keep your job, you got to go get jabbed, or you got to wear a mask everywhere, or whatever the situation is. You want to be a school teacher, you got to teach, woke ass bullshit, and you got to call people they, like whatever the situation is. The more rules and regulations you make, the less likely people are to participate in the thing that you're making rules and regulations for. So you generated a bunch of new jobs. Great job. And then you had a bunch of teachers quit. You had a bunch of nurses and doctors quit. You had a bunch of airplane, employees or airline employees quit. You had all these businesses that now, say, oh, if you have over 100 employees, you have to get the jab. So people say, cool, I'll just go find a different job somewhere else where you don't force me to do things. Maybe for whatever reason, religious reason, health reason, maybe you're allergic to it. Maybe you had a bad experience with a jab in the past. Maybe you already had, the V, so you have antibodies. So there's no reason for you to get the jab. Like maybe you just don't believe in it. Maybe conspiracy, whatever the reason is. The fact of the matter is, when you regulate people and tell them what they can and can't do, some people will just rebel against it for no other reason than they just don't want to be told what to do. But the fact of the matter is, when you regulate something, you will get less of it. It's a fact, whether it's a good thing or a bad thing. So, you want to regulate poaching? Sure, you're going to get less poaching, but you're also going to make poaching probably, more viable to some people. So most people will probably stop poaching, but that's going to cause the price of poached goods to go up. Therefore, all of a sudden, when somebody goes to sell, a piece of ivory from the elephant you didn't want them poaching, or the rhinoceros or whatever, instead of getting $1,000 for that piece of ivory, now they're going to get $10,000. So there's always going to be supply and demand effects to all these different things. So you want to wonder why all these people aren't going back to work? Well, I could give you basic ass reasons. Policy. Stop making all the policy. I bet everybody goes back to work. Stop giving people money. I bet everybody goes back to work. I get it. I see completely all these different things. The free market will do what the free market wants to do. And the more you manipulate it, the more you get these excesses, these unexpected results. So let's see how that translates over to the VIX. Here's our VIX. Been going sideways inside of, basically this is our range going back for eternity on the VIX. When we get down here in the green area, that means we're about to get some massive volatility spikes. When we're up here in the red area, it means volatility is probably going to calm down and chill out for a while. When we're in the neutral area, we're at this heart line here in the middle. So where are we at right now? We're at the heart line here in the middle. And then inside of that, we've had this descending channel that's been taking place, basically since the CVD dump. And again, when we're at the top of the channel, it means volatility is probably going to top out here shortly. When we're at the bottom of the channel, it means probably we're going to have some serious volatility here shortly. And then when we're in the middle, probably not going to see a ton of anything. So here we are in the middle of these two things, basically in our neutral zone. So that tells me like we're probably not going to just see some massive stock market crash all of a sudden. We're probably just going to keep kind of cruising along. So this whole time while the VIX has been kind of grinding down, what has been going on in stock market? It's been kind of grinding up. So I would say probably we're going to keep doing that. Makes sense to me. Let's talk about oil next. Okay, so oil breaking out to essentially multi-year highs. Oh, and what's the price on oil? $80. Oh my God, that's so crazy. Weren't we talking about $80 oil when everybody else was saying it topped out? When oil was at $0? When oil broke down here and we literally said that was the perfect bottom for oil, $62. It's going to 80, then 100. And now look, oh, there's an energy shortage. There's not enough oil. There's not enough coal. There's not enough natural gas. There's not enough whatever. It's all just BS narratives after the fact. After everything happens, everybody wants to act like they saw it coming. Well, now what we need to pay attention to here is on the weekly, this first top that we got right here on oil, this second top that we got right here on oil, this third potential top that we're starting to push up to on oil. We have potentially some bearish divergence taking place. I mean, we definitely have 2 points of bearish divergence already between these 2 points, but now we're potentially going to be working on a third. Now, maybe the stochastic pushes up here, all the way to 100, invalidates bearish divergence, whatever. Probably still going to get a sell-off because we'll be at 100. Maybe the histogram breaks back above the slope line here, pushes back up, and we go to new highs. Probably going to get a pullback anyway because we're going to be at, highs from like the last decade. So regardless, we're probably going to get a pullback on oil in the near future. Does it go to 100 first? Does it go to 150? Does it go to 82? I don't know. I can only look at targets and tell you the probability of something happening. But we are 100% seeing bearish divergence taking place on oil. What does bearish divergence mean or bullish divergence mean? It means that the trend is unsustainable. It is unlikely to continue into the future. But it can continue for a while. But it's unlikely to continue indefinitely or impossible to continue indefinitely. So now here looking at the monthly chart on oil, we're in a very strong uptrend. All green histograms, blue slope line above the zero, in the bullish control zone on the stochastics, above the 200 exponential, above the 200 simple, both slope to the upside. What does this tell us? It tells us oil is in a strong bull trend and probably going to continue in that bull trend for some time. We took out the high from 2018. So where are we going next? Well, we're probably going to retest this little series of highs back here from 2012. So where does that put us? About $100. So that's our next target, $100, somewhere roughly around $100. So what does that mean? It means that probably, oil producers and oil related industries are probably going to do well. So even if we did get some miraculous, crazy stock market sell-off capitulation event taking place, well, money's always going to look for somewhere to be. So maybe you see an initial move in one direction somewhere, but probably oil related energy is going to be doing well. So hint, hint. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Don't listen to all the mainstream narrative. Don't listen to Kathy Wood's stupid ass. So, are we going to make it up here to our previous all-time high, 140? Are we going to go to 150? Are we going to go to 200? Definitely a possibility. Is oil probably not always going to be a necessity and at these prices into the future? One day, are we going to have hydrogen-powered cars and solar stuff that works and, micro nuclear reactors, like mini nuclear reactors inside of trains and stuff like that power them and then we don't need oil? Sure, I totally agree. Are we going to one day, invent nuclear, fission and have some kind of fission reactor, and then we don't need any of this? Sure, I'm sure we will. Are aliens going to come down from, the skies and give us some kind of alien technology that we've never even heard of that's going to one day power everything on Earth? Sure, definitely there's a possibility. I don't know how probable that last one is, but it's possible. But in the meantime, oil is likely going to $100 because none of that shit is in the foreseeable future. So we're in a bull market in oil. Oil is going to retest $100 very soon. It is likely it either does that and then gets a strong pullback, or it gets a strong pullback and then continues on to do that. What the order is of those things, I do not know. But I know what this chart is telling us and what's likely to happen, regardless of what Queen Kathy has to say. But again, she's also been wrong on literally everything. So let's jump into the Dow Jones. I'm not seeing anything in the Dow that tells me that like one direction or the other on shorter time frames. We're back above the 8 and 21. Looks like they want to cross back up to the upside. Sure, I totally think that's a possibility. Are we going to get something like this where we come up and put in a lower high and then come back down and retest the 200 exponential and simple? I think that's possible. It's definitely possible. I would not put it out of, the realm of possibility that we put in a new high. I still think these things look like they're going higher. Now here on the weekly, what I'm paying attention to is what would change that? Well, we're below the 8 still, trying to hang on to it, but we're getting slowly but surely lower weekly closes on the Dow Jones. We have the hard sell signal and we have left the bullish control zone. We're now below the 8 and barely above the 21. We now have a bunch of red histograms. We have a red slope line and we have clear bearish divergence from this point to this point. We have a high here. We have a lower high here. We have a high here. We have a higher high here. So do we come up and put in a third higher high with a third lower high on our indicator oscillators and get triple bearish divergence and then a massive dump, a massive capitulation event? That's most likely the scenario that I see happening. Does it have to happen? Could we just get that bearish divergence plays out now and we dump? Could we just get a bigger pullback but we don't get a dump? All possibilities, all 100% possibilities. But right now we are seeing continued weakness in this. We now have our second month in a row with the red histogram. We now have losing slope on the blue stochastic, and we're barely hanging on to the 8 EMA. So it tells me that we are showing more weakness now in the Dow Jones than we have showed this entire trend over the last, couple of years, essentially. What's up, brother? Good to see you, Spike. Welcome back. SPY. Same thing, back above the 8 and 21, trying to move back to the upside, trying to flip this back over. Let's go look at our longer time frame. On the weekly, same exact thing. We hang on to the 21, we're below the 8. We're seeing the hard sell signal. We have left the bullish control zone. We have lost the slope. We're seeing red histograms. Again, we're seeing more weakness now than we have seen this entire trend. And then here we are barely hanging on to the 8, sloping down on the blue, and then our second red histogram. So again, more weakness than we have seen throughout this entire trend. IXIC, Nasdaq is next. Again, same signature here. Weekly, once again, bearish divergence taking place between our peaks. We have higher peaks here, lower peaks on our indicator oscillator. Left the bullish control zone, hard sell signal, bunch of red histograms, red slope line, below the 8 and the 21 on the weekly here. So again, showing weakness, looking like we're potentially going to be selling off. Could we still put in a higher high? Probably, but it's probably just going to be a pathetic little higher high before a sell-off. 2 months in a row, red histograms, and it looks like we're about to get the cross between the blue and pink stochastics. So do I want to be investing in things at these levels? Do I want to be buying into these indexes at these levels? No. Russell 2000, trading inside a range forever. Where are we at? The heart line. We're at the neutral zone. We're sitting on top of the 200 simple. We have tested the 200 simple multiple times, and now we're barely hanging on to it. Next test will be of the 200 exponential. I fully expect the Russell to be down at 2150 very, very soon. Could it go up before then? Sure. But it will test that 200 exponential. And then here on the weekly, again, just been going sideways forever. We have lost the slope line. It is now red. We're getting a buy signal, but basically doing nothing. I do not trust this. It looks like trash. And then again on the monthly, we have now traded in this range for the entire year at this point in time since February of 2021. We are losing slope on the blue stochastic. Still got a little ways to cross first. And now we have 4 months in a row of red histograms while we trade sideways. So again, very weak. Seeing some definite weakness. Sector-wise, XLB materials, giant descending triangle. I think we're going to operate inside this triangle until we don't. So I think more than likely, is it possible we break out to the upside? Sure, there's a 33% chance we go up from here outside of this range of like $85. There's a 66% chance, though, that we break down from here and get a measure move to the downside. So right now, materials do not look particularly good to me. XLC communication, we have broken down. We basically came back up and all but filled the gap right here. We have now broken down below the 8 and 21. We have a short-term trend to the downside on the daily. I think at this point in time, we retested our support right here at $80. We found support the first time, came up and could not get above the moving averages. I think more likely than not, we tested the 200 exponential and simple. So I think $77. We are getting a hard buy signal coming out of the bearish control zone. It's possible if we get back above 82, we start moving back to the upside. 100% possible. XLY, consumer discretionary, basically just been going sideways here, trying to hold on to the trend. Seeing a little bit of weakness taking place, but no reason to be biased to the downside on consumer discretionary as of now. XLE, energy, keep in mind this is by far the weakest sector, but we are breaking out. We have broke out to a new high here, obviously fueled by oil and some of the other stuff. We're seeing record coal prices around the globe. Even if they're not in your home country, it's happening throughout the globe. So it's very important. Very strong uptrend here on the shorter time frames. But when we zoom out and we look at like the monthly time frame, we'll see that we are so far off of the all-time highs. All-time high 2014, previous high before that 2008, and we're not even above that yet. A lot of resistance here, but we have flipped back over on the monthly, the 200 exponential. We still have 3 weeks left in this month essentially. But probably if we maintain above that, we're going to come up here to like 65 and retest 200 simple. Blue slope line, a bunch of green histograms above the zero line, bullish control zone. So it's not unrealistic to think that we can consolidate for a few months here. But going into winter months, I would say probably more likely than not, we're going to see this go crazy. So again, not financial advice, but if you were looking for somewhere to put your money, might not be a bad place. XLI, industrial, bouncing the 200 exponential and simple. We did get back above the 8 and 21, trying to move back to the upside, but we're seeing some definite weakness as now we're below all of these key support levels here. So now that what was support is now acting as resistance. So it's very important, we broke down from the channel, we reclaimed the channel and got that, but now we're running into a bunch of resistance. We have the heartline resistance, we have the previous support acting as resistance, we have the heartline of our larger channel as resistance. So for me, the path of least resistance in this case for industrial is down. Could we see a pop if all of a sudden we get a new infrastructure plan or something crazy happens? Sure we could. We definitely could. But the path of least resistance is down. XLF, financial. So rates are rising. What do banks make their money off of? Rates. Mortgages, car loans, bank deposits / personal loans, whatever. We're retesting the highs right here. I expect this to break out to the upside. How am I going to put targets for financial? Well, now that we're basically up here consolidating at the top of the range, we can use Fibonacci extension of the previous pullback and see where we're likely to get our target to. That's a viable option. And that can give us some kind of target to the upside. I would say more realistically than not, we will probably come up to the 1.618. So I would say probably $41 is a viable target to the upside. Currently at 39, so probably not going to be like life-changing money. But at that point in time, blue sky breakout. So, maybe we hit the 2.618. Maybe we hit the 3.618. Who knows? But looks very, very viable that this is going to be moving to the upside, at least in the near future. And again, maybe the rates start rolling over and then we get a pullback and then, of course, that's a possibility. XLK, and then we're going to take a break here shortly. XLK technology, trying to reclaim those levels. Hard buy signal coming out of the bearish control zone, bunch of green histograms. Maybe we come up here, get rejected and roll over, touch a 200 exponential and simple, retest this resistance, turn support. I think that's probably more likely than not. XLP, consumer staples, bouncing the 200 exponential and simple now, trying to reclaim the 8 and 21. If they cross back to the upside, I think we probably get some continuation. But as of now, overall, trying to build some momentum back to the upside. I think a lot of these things are just going to float back up to the previous all-time highs. XLU, utilities, showing some definite weakness compared to everything else we've looked at here. You know, we broke down from our 2020 in February, and we came all the way back up almost to that high again, and now we're having some trouble maintaining. Now, we had a couple other times where that happened, then we burst back up. Definitely a possibility we creep back up. Definitely seeing a hard buy signal out of the bearish control zone, bunch of green histograms. But we are losing the 200 exponential and simple. So right now, this is like neutral. What happens here? Do we break up from here and go into a long uptrend? Do we break down from here and go into a long downtrend? Could go either way, but hasn't been doing particularly well. Real estate, definitely seeing some weakness in real estate for the first time. This is by far the weakest real estate has looked, since we basically came out of the pandemic. So what does that mean? Well, we're probably, if we can hold this level, we'll probably just creep back up and put in a lower high. If we don't, I think probably around like $42 or so. Coming out of the bearish control zone, hard buy signal. I think we get at least some short-term attempt to push back up, but we're seeing some resistance and unable to reclaim these areas. So real estate looks very weak short-term. XTN, transportation, trying to retest these key areas. The 200 simple is above the 200 exponential. We're at a key resistance, which was previously support. We are gaining some momentum back to the upside, trying to get back up here and break back out. We'll have to see how that plays out. I'm not particularly bullish in transportation. Jets looks pretty bad. It is trying to reclaim the 200 exponential and simple and has reclaimed the slope on them. It's possible it does what Bitcoin does and starts creeping back up here, but not particularly ambitious on this one. Hail looks terrible, below the 200 exponential and it has rolled over red, below the 200 simple and is very close to rolling over red. Not particularly looking good. Essentially looks like a descending triangle, which we have technically broken down from and eventually going to get the measure move of, which is probably going to take us down to like $41, something like that. UPS broke down below the 200 exponential and simple. I would expect some kind of strength out of this going into the Christmas/holiday season. Does not have to happen, but we did leave a breakaway gap back here. When you hear people say gaps to the upside always get filled, or to the downside always get filled, well, that's easy. If something if this ever puts in a new all-time high, it will have filled this gap. So of course you can sit here and say all gaps to the downside eventually get filled unless a company goes out of business. So yeah, sure. All gaps to the downside always get filled, assuming we ever go back up to those highs again. Sure. Does not mean we're going to come back up here and fill this anytime soon. It could take 10 years in a downtrend and then finally come back up to here. But at this point in time, macro look at what's taking place, and we're seeing some bullish divergence taking place between our indicator oscillators. There's a decent likelihood if we can reclaim this area, 200 exponential and simple, we'll run into a little resistance at 190, and then we'll come up here and fill this gap at 209, theoretically. Last but not least, before we take a little break, FedEx, again, massive gap down here from 250, 200 exponential and simple, rolling over to the downside. This looks terrible. Looks very, very bad. Losing this level was very, very detrimental to the overall look of the chart at 235. And that gap down is definitely part of it. Now, are we going to come back up here and fill the gap? I think it's very likely that happens. But after that, I think we see continuation to the downside. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. I believe we had talked about a potential trade setup. Yeah. I think there's a likelihood that there's like a 12% roughly that we can capture on this. 4% stop loss, 12% roughly to the upside, 3-to-1 risk reward ratio. Not the best, but definitely potential for a scalp. And maybe it does go to new all-time high, and that's a positional trade. So, but the idea is to look at risk or reward, and then macro, micro reasons that would or would not play out. So, let's take a quick break. What's up, New Pathway? Good to see you. No mercy. Finish him. We'll take a quick break. Give me like 2 minutes, guys. I'm going to grab a quick little drink, use the restroom, and we will jump back into it. Take a look at crypto and all the other good stuff when I get back. All right, let's keep it moving. Let's jump down in here. We'll take a look at the rest of the stonks, and then we'll do crypto next, and then we'll get into our commodities. So Tesla, still at that same level. You know, I mean, as far as I'm concerned, we have broken above that key resistance. We're now testing it as support. You know, still inside of this ascending channel right here. I am not interested in Tesla at these levels, but I can understand how someone would potentially be bullish here. Looks like, in my opinion, it's probably going to be a throwover scenario. I think this has to do with their earnings call. I think it has to do with, you know, the new factories and all that stuff. I'm very skeptical. I think Tesla is extremely overvalued, and I look at Elon as the great manipulator. But you could argue that this is a breakout and you want to take a continuation trade here, and I would not argue against you. But for me, no thank you. Uber, same thing. This rally was based off of Uber basically saying that they're going to be profitable in the future. Okay. Massive gap left behind at 39.97. Could this be a breakaway gap and we go to new all-time highs and never come back down here? Definitely a possibility. I do not think it's likely, though. A bunch of overhead resistance. We do have momentum in our favor. Bullish control zone back above the 200 exponential. Probably going to come back up to like $50 or something like that. Again, this chart does not look particularly good to me. It looks like a breakdown, a retest, and then if we reclaim these levels, potentially continuation to the upside. But I would rather give up some of the potential profit in exchange for more confidence in the trade. On the weekly, though, we did get the hard buy signal here, and we have reclaimed the 8 and 21. So you could make a strong argument for continuation on Uber here. Pinterest next. Breaking down to new lows. Looks terrible. The histogram is back above the slope line. The slope line is still red. We have exited the bearish control zone and looks like we're about to potentially get the cross. You know, blue crossing back above the purple or pink. Last two times it got rejected, but it's definitely a possibility. We'll have to wait and see on this one. I do not like how Pinterest looks. It looks to me like a, you know, giant descending wedge slash channel, something like that. But we do have a trade setup in play for a potential 21% to the upside. I put a 9% stop loss on this, but in all reality, it's probably closer to like a 5% stop loss. But at this point in time, it's above our entry. So in all reality, you know, you could just tighten this back up and then re-enter lower if need be. I don't know if this one's going to play out, but it would just be of the retest of the 200 exponential, potentially higher to retest the 200 simple in the top of the range. Done quite well on the last couple pops on Pinterest here. Obviously, that last one was like 32%. The one before that was like 20-something%. So, you know, Pinterest has given us so much. We can have just a little bit of faith in it. We'll see how this one plays out, though. Overall bad, though. Below the 200 exponential, below the 200 simple, breaking down to new lows. But I do like this bullish divergence. We have a low here. We have a lower low. We have a low here. We have a higher low. We have a low here. We have a higher low. So again, I like the bullish divergence. And that's why this stream is all about the divergence. This is the market literally getting down on its knees and putting its hands up. And in its hands are opportunities. And it's just presenting them to us. Here, take this free money. Take this trade setup. There's divergence. And I promise you, it may last a little longer, but it can't last forever. Take this gift from me. And that's what divergence is. It's the market telling you, hey, there's an opportunity here. You don't have to just buy overvalued shit that looks mediocre. Now, granted, I would rather take divergence in the direction of the predominant trend. You know, if it's bullish, I would rather bullish divergence play out and then see massive continuation, or vice versa in a bearish trend, bearish divergence, more likely to see a larger move afterwards. But either one can work out, whether it's counter or with the trend. It's just the difference between taking a position and, you know, essentially like a scalp. Wish. You guys know how I feel about Wish. You know, down at new lows right here. Hard buy signal coming out of the bearish control zone. Trying to flip back over the slope blue right here. Currently have an open trade on Wish. Definitely some potential here for a serious move, as it's way below the 200 exponential and simple moving average. But it is at all-time lows, which is not particularly good. It is showing no divergence on the stochastics, but some divergence on the histogram here. So do have an active trade on this guy. We'll see how that works out. I think at least a retest of $6 is in the cards. But it, it's at $5 right now. So that's, what, 20% move? No. Yeah, 20% move. But obviously anything at all-time lows, not good. Or is it? Airbnb, reclaim the 200 exponential and simple. Both have a slope to the upside above the 8 and 21. Seeing a little bit of weakness here on the shorter terms, but overall, it is trying to move back to the upside and starting to look better. It did reclaim the 8 and 21 on the weekly. Bunch of green histograms inside the bullish control zone. So is this topping out? Maybe. Maybe it's topping out. But if it can just maintain this level above that massive little wick pullback, especially above 163, it's going to look like it's basically going back to the upside. Tons of resistance right here, though, because this is basically just the bottom of the triangle. So I don't know where that triangle went, but we basically had this triangle in play. This was our descending triangle, and then we got the breakdown of the descending triangle, and this is like a retrace back up to the bottom of the descending triangle, which obviously from our bottom to our top, we broke back down to the 886. It's trading very technically. Then the 618, then the 886, then the 618, then a higher low finally, and then straight to the 0.5, back to the 618. Then we went, straight to the 382, then back to the 0.5. So next target to the upside, potentially, we already got, this initial little 6% move, but in all reality, maybe we get that move next, the 15% move, back to the 236. But again, don't particularly love this chart right now, but overall been playing out nicely. I mean, we've obviously capitalized on quite a bit from Airbnb, and definitely looks like there's still some in the cards. Bumble is next. Again, same thing with Bumble. Bearish control zone, trying to cross back to the upside, potentially exit the bearish control zone, technically putting in another higher low here. Don't particularly love how this looks, kind of like breaking down out of the ascending triangle, called the initial move here with the descending triangle breakdown measure move, capitalized on like over 40% move back to resistance. But I'm not currently in this one. I think that technically we have broken out the bottom of the triangle. We have retested what should have been support as resistance now, and then broken back down. I think now we're about to get continuation. Now, granted, we know, everybody knows, but we especially know that this is a bullish pattern. An ascending triangle has a 66% chance to break out to the upside, but that still leaves a 34% chance it breaks out to the downside. So is it going to break back out to the downside and revisit the lows? Probably. Technically it has already broken out to the downside. But, I wouldn't give up on this quite yet. But, there's a possibility it revisits the lows or somewhere near the lows, or possibly even puts in a new low. We'll have to see. We will have to see. But for now, no action for me. Baidu. So we're seeing a little strength out of the Chinese stocks. We're seeing Warren Buffett and Charlie Munger jump on the Chinese stock train. It's important, though, that we pay attention to one key factor with Warren Buffett and Charlie Munger. They do not use any technical analysis. They are probably buying into China because it's a good deal based on previous evaluations. It is selling at a discount because it's come down, over 15% to its high, from its high to its lows. They're not buying into it because of technical analysis, because we're clearly in a bear trend on the 200 exponential and simple to the downside. Normally also a key factor that has me curious about this. Normally, where do we find out about Warren Buffett and Charlie Munger's, positions from? Well, we find out with their quarterly statements. Obviously, like, they have to disclose everything either 30 days after or in the quarterly or semi-annually, depending which statement it is. That's where we find out about stuff. So why all of a sudden are they swooping in, buying up a bunch of Chinese stocks and then announcing it to everyone? That's not normally how they do things. So I find that a little bit peculiar that all of a sudden they're stepping in, buying massive positions and then telling everybody about it. Are they trying to create a bottom? Are they trying to pull a Cathie Wood where they buy in and then they tell everybody that they bought in and hope the market bails them out of a potentially dangerous position? We'll have to wait and see, but it sure seems like that to me. I think they're trying to do like the social media thing where it's like, oh, well, we'll just buy something and then tell everybody about it. And then, we have enough people follow us that it pushes it up. Now, granted, we do see some technicals here. Hard buy coming out of the bearish control zone, blue slope line. There's definitely an argument to be made for a scalp up to 177 or 206 as discussed. But what I don't like about this is on the weekly, we have lost the slope again. On the 200 exponential and simple, we're back below it. We're below the 8, below the 21. 200 exponential and simple all have negative slope. We do have the divergence signal, buy, sell, buy. We do have a bunch of green histograms, but it did not make it down to the zero line yet. So I think if anything, this will be just a dead cat bounce followed by continuation. Now, we talked about these certain areas being important, but on the macro, when I look at China, when I think about China and I understand the stock market is forward looking, do I think that China has any more headwinds ahead of it? Do I think that there's less manufacturing taking place? Do I think that there's, less positivity taking place in China right now? Do I think that there's a lot of potential problems still with CVD, with the Communist Party, with all the different stuff going on right now? Or do I think all that's behind us? I definitely think, Evergrande, the real estate markets crashing, industrial manufacturing's crashing, doesn't seem like the best time, in my opinion, to just leap into China head first. But we'll wait and see. On the monthly, we're below the 8 and 21, and they look like they're about to cross to the downside. We're well below them. So maybe we get that move back up to 173. But in my opinion, this looks bad. It looks bad. Even if we literally just go sideways for like 2 years, I don't want anything to do with it. I'm not going to just let my money sit there and do nothing. There's too much risk to gain so little and lose so much, potentially. Alibaba, same thing. Looks absolutely horrible. 200 exponential and simple, accelerating to the downside. We've got this pathetic little bounce, and everybody's all pumped up on, Alibaba. How does that look to you on the weekly? We're below the 200 exponential and simple now. They both have a slope to the downside. We're below the 8 and 21. This was a reaction rally back up to the 8 and a bunch of previous support that's likely to act as resistance. We broke down from this previous low here. We still have a lower low here. If we take out 129 to the downside, this will look horrendous. Absolutely horrendous. If we reclaim this area and continue to the upside and get back above 200 exponential and simple, sure. What's happening right here, though? For the first time in Alibaba's history on the monthly, the 8 and 21 have crossed to the downside. We're at the beginning of a bear trend on the monthly, according to indicators and oscillators that are proven. But, Charlie and Warren, maybe they're right. But I think realistically, this could come back up and retest like $200. Definitely a scalp potential in play there. But there's just so much headwinds in China right now. It's tough to put any kind of legitimate capital over there, especially with their lack of disclosures. TME, Tencent, again, looks absolutely terrible at lows. Putting in some form of divergence well below the 200 exponential and simple. You could argue a counter trend trade back up to retest them, is like close to 100% move. So definitely a possibility. Don't love this. Don't love any of these. Diddy, trying to carve out a bottom. Hard buy here, getting back above the 8 and 21. Again, you could argue for a, nice little 10, 20% move right here. There's just too much headwinds, in my opinion, to be messing with China on some of these things. There is one, though, that I'm currently in. BZ is doing the opposite of everything else. It's all of a sudden selling off while the rest go up. This just tells me like money is flowing back out of this after little gains to go into some of the other Chinese stuff. JD.com, again, having a little bit pushback up, trying to revert to the mean, 200 exponential and simple, hard buy signal. People are just buying into a lot of these because they're overbought, thinking that they just bought the bottom on something. Will that happen? We'll have to wait and see. NEO, again, this one has stayed stronger for longer, but below the 200 exponential and simple, both negative slope to the downside. I don't particularly like NEO anywhere near these prices. EDU, still have current position open on this one. 162% potential to the upside with 24%, potential to the downside. Something like a 6.6 to 1 risk reward ratio. I'm slightly underwater. My entry was like 219. So we'll wait and see. I like the upside and risk reward potential on this one for like the gap close, 0.5 fib retracement, much better than some of these other ones. So, if I'm going to gamble on something like China, I'll gamble where I have the best odds of winning, probability of winning, etc. So Peloton. Peloton still looks terrible. Came down here, retested those lows as expected, as predicted, as anticipated. Hard buy signal now. It's going to try to push up here. Again, 200 exponential and simple are rolling over. Clearly in a bear market. Do we come back up here and retest? Possibly 105 again? I mean, it's possible. Peloton's trash. TSM, Taiwan. Again, Taiwan. Do I want to get involved with Taiwan right now? No, I don't want anything to do with Taiwan right now. No offense to them, but they're literally on the edge of a war with China. So probably not the place I want to put my money. Hey, do you want to bet on this place that might not exist in the near future? I don't think so. I don't think I want to tie up too much of my cash there. Broke down below the 200 exponential, slope to the downside. There's an argument, again, for an 8% scalp right here. I'm not taking this, but, and 15% to retest. We're just trading inside a channel. 820, stochastic's about to cross the upside, leaving the bearish control zone. Likely to play out. This is likely to play out to the upside for a little 8 to 15% move. But again, too many headwinds on that one. I mean, I don't love U.S. stocks or Canadian stocks or anything right now or whatever, but I definitely don't like, the Chinese and Taiwan. Little too dangerous for me. Intel, the worst of the semiconductors, still looks absolutely horrible, below 200 exponential and simple. And again, part of that argument too is, why would I invest in Intel when it's the worst? Why would I invest in Taiwan Semiconductors when it has the most headwinds? I would much rather take a position in NVIDIA, one of by far the best performing and best looking stocks in the market. Stochastics rushing to the upside, bunch of green histograms, trying to reclaim the 8 and 21. I'd rather take a position in that, which, full disclosure, I am in NVIDIA for the long haul though. AMD looks okay. Better than our other less favorable. But again, AMD I think is pretty overvalued, but doesn't look bad. The 200 exponential back above the 200 simple, back above the 8 and 21. It's got a little cult following too, so definitely some potential. SMH, this is semiconductor ETF. If you don't want to go for one or the other, you can just get a little piece of the space. Retesting previous resistance as support, holding for now off the 200 exponential and simple. Bearish control zone, trying to roll over back to the upside. I think more likely than not, this sees continuation to the upside. ARKK looks terrible. Bear market officially confirmed. Record outflows from Cathie Wood's funds. I wonder why. After a year of no one making any money but Cathie, all of a sudden outflows from her funds? That's strange. That's strange, Cathie. It's almost like someone on this channel speaking right now literally saw all this happen and warned everyone before it all happened. Right about here. Oh, but oil's going to zero because the whale blubbers and the... Shut up, Cathie. You're an idiot. And it's not because you're a woman. There's plenty of smart women. You're just not one of them. Or maybe you are really smart. And when we look back 50 years from now, all the stuff you said come true, but it doesn't matter if everyone's portfolio goes to zero before then. Fucking idiot. Bear market looks like it's going to try to push back up here and retest maybe 122. Hard buy signal coming out of the bearish control zone. Man. And I've noticed too lately, like, I'd say Kathy is like an attractive older woman, much older woman. But lately she's looking a little rough. I think the stress is starting to get to her. I think that stress is starting to get to old Kathy. ARKF looks slightly better, trying to hang on to the moving average. Hard buy coming out of the bearish control zone. Could easily get a retest of like 55 or something, 10% move. But I mean, she just has this narrative, and she's just like sticking to it, guns blazing. 5-year time horizon. I just can't even. If you start looking at her stocks too, you know, she was diversified into like 50 different ones. Now you start going into them and there's like 12 of them and they're in every single one of her funds. And it's like at this point in time, you're literally like, you could just buy like the 5 stocks and just cut out like the shittiest 10 or 12 or 15 or whatever on your own. But I mean, and then not pay Kathy. Skills, all-time lows, looks absolutely terrible. Bear market, probably going to zero. It's at $8 right now. I mean, you can't even, I don't even know. It's just so bad. We're going to the moon. We're underground. We're going to the center of the earth. We're going to hit lava soon. I mean, this looks terrible. Looks terrible. We'll see how it looks after its earnings in a couple months. It's probably just going to keep going to zero. It's on its way to zero. Hasn't got there yet. We'll check back later this week. Maybe it'll bottom here, though. Maybe this candle will be the bottom. But I doubt it. Teledoc, breaking down to new lows. Clear bear market. Looks terrible. If it hangs on to this region at like 115, it'll be okay. I mean, it tried to retest the 200 exponential and simple here and couldn't do it. Again, in the bearish control zone. I mean, this just looks so bad. It could bounce the 200 exponential here and come back up to like 150. But, I mean, man, so much of this stuff just looks like trash. Palantir. Oh, man, people are like crying about Palantir. Manipulation, insider selling, blah, 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 blah. It's below 200 exponential. It's below 200 simple. 8 and 21 across the downside. It's in the bearish control zone. All red histograms. Palantir looks like straight up trash right now. It looks like trash. It's like the trash, but it's like the trash right when you throw it in the garbage. So it's not the trash like a week later when you go to take it out yet, with like all that funky stuff in the bottom of the bag. Like, you know what I'm talking about. If you ever got a hole in the trash bag, you're carrying it out, and it leaves like that little slime trail. It's not there. It's not like the Cathie Wood Arc Fund slime trash, but it's on its way. It's on its way. Does not look good. UBX, terrible. Terrible. I looked at this company the other day, and like Unity Biotech Holdings, like to try to make like a positive argument for this, and there's like nothing. They don't even have any income. There's not even a product. They used to do a thing, and now they do nothing but go down. There's nothing here. And again, one of Cathie Wood's favorites. Apparently, biotechnology, and we're going to cure the things and do the stuff. Okay, Cathie. Unity Software, looking good. Reclaim the 200 exponential. 200 simple is going to probably roll back over here, leaving the bearish control zone. Slope line is still red, and we are at resistance right now, which was that double top here. So could go either way. We got the first little trade setup played out. I don't know if we're going to get the rest. If we break above the top right here, sure, I definitely think we get the remainder of it. I'm not sure if it's going to play out like that, but the initial resistance I'm paying attention to is 146. Next stop 159. But the truth is on this one, keep moving that stop up. Not financial advice. not your financial advisor. As far as I'm concerned, we broke down from this ascending trend line, came in and put up a new high after the breakdown, after the measure move of the ascending triangle. This thing could just lose it at any point in time and roll back over. But overall, Unity Software is actually like a legit company that's good and does stuff and things as well as stuff. Zillow, trying to get that 821 cross. It has attempted it so many times along the way and it's failed. And now it's under the 200 exponential and simple and they're angled to the downside. A hard buy coming out of the bearish control zone. Potential here for that scalp up to 107. Is it going to work though? I honestly don't know. I mean, potentially look at a re-entry. I mean, at this point in time, it pretty much has to, like, the first cross right here failed. The cross right here failed, or that technically is the first. That's the second. So I'm not interested in this until it actually crosses again. And then maybe I will take, a new entry into this. But, I mean, it's just 16%. I just think a lower entry on this is just much more likely. Yeah, there's no trade set up there. And like people are just fudding my Zillows all the time. They're fudding my Zillow. Take that Zillow out of your mouth. Corsair. Yeah, I mean, still looks very weak. 200 exponential and simple, both angled to the downside. In the bearish control zone, trying to get that cross back to the upside here. But again, just looks so weak. Retesting, that low again. No bearish or bullish divergence, rather. It's hanging on to this tiny little nub of resistance / support. A breakdown from here is going to put it at like $21. Much rather get the entry off $21. This looks bad. Looks bad. Corsair's bad. Company's good. Products are good. But the stock price, not so much. Or the chart at least. Zoom looks terrible. Breaking down new lows, hanging out at the lows, probably going to lower lows. Trying to build up some kind of a move right here. Has a little gap that it could fill at 337. I mean, at this point in time, damn. When this thing does try to find a bottom, there's some serious potential for it. That would be, at this point in time, like a retest at the top of the range and both 200 moving averages. But it's in the center of the range right now. It's at the heart line. So which one is it going to do? Is it going to break down or break up? I mean, based on what it's been doing forever, it's probably just going to break down. But there is an argument to be made. Got to show some life first, though. If it gets out of the bearish control zone and gets above the slope line here, I think there's definitely some potential. What are we looking at? 28% move. But again, very bearish overall. Very bearish. This thing got way too overpriced, which is most of tech. It's most of tech. It's just showing it. It's just showing his hand. It's like the first loser in a game of Texas Hold'em with 8 people. And it already laid down its hand and clearly has lost because it has nothing. It was bluffing. But there's still 7 other people. Only one of them is going to win. But there's going to be 6 other losers. So the other 6 losers are just the rest of the tech space. They just haven't revealed their losing hands yet. In my opinion. For that metaphor, that analogy for those card players out there. Square, bouncing 200 exponential and simple. I'm still looking weak right here. No divergence. I think it's got further downside. I mean, it's basically just trading sideways at this point in time, and that's a bounce at 200 exponential and the heart line. I'd be interested in it at the bottom of the range. I'll be interested at 190. Gladly miss the boat on that if it goes the other direction. PayPal, I mean, it's like same exact chart basically. Basically just trading sideways in this range, broke down from the ascending triangle, capitalized on quite a bit of moves out of PayPal already, trading very, very technically. There's an argument for a buy off the 200 exponential and simple, but honestly, I mean, now that part of the biggest argument for PayPal and Square and all these other companies was that the banks and the actual financial industry was like doing poorly because of rates. So now that rates are reversing, I think that probably we're going to see a reversal in this like alternative trend as well. So I think more likely than not, there's additional headwinds on these from banks doing okay and whatnot. So, we'll wait and see. Hard buy signal coming out of the bearish control zone. Definitely could take a stab at this, but I'm not sure that there's a viable trade setup for someone like me currently. Not with so many other opportunities as well. eBay back up here, trying to get back above that previous high. Again, one of the strongest stocks, consistently putting in higher lows and higher highs. What's going to happen next? Didn't quite get down to the buy area here, but again, put in a higher low, crossing the 821 back to the upside. I think it's going to new highs. Snapchat got that breakout, gave the whole thing back, and that to me looks very bearish. This looks like a throw over a failed breakout to me. Man, I keep saying how bearish this thing looks, and then it keeps just hanging out or going higher. So maybe I'm wrong, but I'm not shorting this thing, but I'm not interested in it until it gets down to like $60, $63. I would love to get an entry at that gap fill range. Maybe this just breakaway gaps and runs forever. But you know what? I heard they're cracking down on you guys, selling your drugs, making your illegal transactions on Snapchat. So y'all better be careful, because we know what you're using Snapchat for. Hey, man, y'all got any weed? Anybody got that yayo? We know what you kids are doing on Snapchat. All right? We know that you're fingering your holes and buying your marijuanas on Snapchat. So if they start cracking down on that, and if the IRS starts coming after your premium Snapchat memberships where you're doing dirty stuff for boys on the internet, y'all better be careful, ladies. They're coming for you. And gentlemen out there with daughters, you better check their Snapchats. Apple, or maybe don't. Maybe have your wife check it. Apple, it could go either way here. Again, they just got that favorable ruling. Well, technically the ruling was unfavorable, but they're appealing it. So maybe this thing keeps floating higher. I don't really know. Hard buy coming out of the bearish control zone. Couple green histograms. Lightweight bounce on the 200 exponential. If this 200 exponential crosses back over the 200 simple, if it just goes sideways a little longer, I got to get bullish again on Apple. It's basically at support right here. So Amazon. Man, Amazon just looks worse. The longer it goes sideways, the worse it looks. Basically had that throw over, came down, retested the 200 exponential simple for the 1,000th time. Again, if we hang out here long enough and the 200 exponential gets back on top, I will be bullish again on Amazon. But as long as this is taking place, this literally just looks like exactly what I said happened beforehand. It literally just looks like a giant head and shoulders. We came back down, we bounced the neckline, and then we're going to capitulate down. And the measured move of the head and shoulders takes us back down to the bottom of this. I don't think we'll break out of the range to the downside. I will, however, take a long position, scalp position / positional trade on Amazon at like 28.71 off the bottom of the range. Could it break out and wick down further than that? Sure, I'm going to wait for some side of like consolidation or something. Could it just bounce this neckline and creep to the upside off of what amounts to this bullish divergence? Definitely could. It definitely could. I mean, I just don't want to take the same trade again. The more times you take a trade, the less likely it is to play out. And the could argue something like that. 2-to-1 risk reward. I don't know. I really, this looks awfully head and shoulders-y to me. Plus we did see it happen like ahead of time, so not particularly ambitious on that one. Facebook, I don't know. There's a lot of headwinds on Facebook. Hanging out at the 200 exponential. Again, looks like it's getting ready to cross the upside. All this stuff wants to push back to the upside. Again, stock market probably not just going to crash tomorrow. I know a lot of people are calling for it. This is the end. Robert Kiyosaki says we're going to capitulate and this 90% is down and everything's going to crash and the bull goes up the stairs and the bear goes out the window. And Robert Kiyosaki says the same thing over and over for his entire life and then just sells you stuff. So careful listening to him. I'm a Marine and I bought the gold over the border at Vietnam and the things and the stuff in the book, and I got a game to educate you on the property because I don't pay the taxes and Donald Trump. Shut up, Robert. You say the same thing. Oh, every interview. They should just not even have Robert. I'm not even going to have Robert Kiyosaki on. I'm just going to play the same thing that he says every time he ever does anything. And then I'll just pretend to ask him questions that he will just say the same thing to. You don't ever need to watch any interviews from Robert Kiyosaki. If you've seen one, you've seen them all. Trust me. Google, looking okay here. Again, one of the strongest. I mean, the longest, the strongest. Go Google. Let's go. And obviously, I mean, I love Google. Google's great. Netflix, looking good here. 200 exponential, back on top of the 200 simple. Breakout from a consolidation that it was in for over a year. Netflix looks good. I'm not sure about their content, but their chart looks good. Netflix, bye, 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 in the words of Jim Cramer. All right, let's do some Crypto Connect. Okay, so Bitcoin futures looks good. I mean, basically, obviously just opened back up. 200 simple is still on top of the 200 exponential, which is a little meh. Also, the Stoch's up here at like 95, so we're probably at least temporarily going to top out here very soon. But in the meantime, looks good. Looks good until it doesn't. Bitcoin, our regular chart, bounced the top of the bullish control zone. Still up here. Stoch's back to the upside. Just creeping. It's doing nothing. It's just creeping around. MACD rolling over for sure, but does not mean we don't just come up like this and put in a divergence. I would expect some kind of divergence before any kind of sell-off here. And then, I mean, nothing really to see here. Nothing to see here. Move along. RSI. There's nothing really going on with the old corn. Just doing the same thing. After our breakout, measure move, new high. Still looks good. Yeah. Nothing to see here. Coinbase chart. Again, just retesting that high. Starting to look like an ascending triangle. Probably going to get a measure move breakout to the upside. Again, at very high levels, bullish control zone, all green histograms, blue slope. We flipped the 200 back over, 200 simple. Once the 200 exponential crosses back above it, it will look extremely bullish. Without too ugly of a chart, I'm not going to go into the whole long thing, but you guys know how I feel. My next target is a retest of the all-time highs. I think we run into a little resistance there and then pull back to probably somewhere around 53,000. So if we continue on this path to the upside, I mean, even a pullback, it's just going to come back to where we're at right now. So, you enter now on the way up, you enter on the way back down, whatever. 70-something thousand, it looks like. If this sticks, if this is sticky. Ethereum, much less ideal. It's got a high, it's got a lower high, and potentially another lower high. Definitely showing some weakness as people just pile on to the other shit coins. Ethereum is just not popular anymore. It's too expensive. It's too slow. The price is too high. There's a lot of arguments to be made on it. It's not the only smart contract in town anymore. 200 simple above 200 exponential. Trying to grind out here. I mean, it still looks okay, but I can understand why people aren't just like excited to buy $3,500 Ethereum. But I mean, I bought Ethereum at $85, so naturally I'm one of those people. But what do I know? ETH to Bitcoin ratio looks terrible. Broke down exactly to our target. 200 simple is now above the 200 exponential. We're at it. Ethereum probably does pop up right here. Whether that's Bitcoin selling off or Ethereum pumping or Bitcoin selling off more than Ethereum, I don't know. But, obviously, I would expect at least the first time we retest these since the breakout back in April of 2021, I would expect the first time we retest these to get some kind of bounce off this. But, obviously Ethereum Bitcoin chart trading very, very technically. I mean, it's probably the same people just going in and out of the two of them. FTT token. Hit that 1.236 perfectly. Came back up to the 236 in green right here. Trading very technically. Man, this one really looks like it wants to come back down. If 50 holds, it probably retests 61. But if it doesn't, I think $43 probably going to happen. It looks like it's rolling over. to the downside. Chain link has done nothing. It's just sandwiched between these moving averages. It looks like it's going to break down. Solana already broke down. So this is the chart we put up last time. Basically in an ascending channel. Came down here, bounced the bottom of the channel back to the heart line. Got rejected at a lower high at the 618. Broke down from the channel. Hanging on to the 382 for now. Probably pushes back up to the 0.5 one last time at 157 and gets rejected. I fully expect Solana at 133 and then at 115 very, very soon. Solana looks like trash. Hard sell signal below the slope line. All red histograms. I'm telling you, nothing changed in Solana. When we took the buy, put the buy order out at $40 or whatever, nothing has changed since then. There's nothing that makes Solana all of a sudden worth $150 when it was just worth $40. It's literally just the Dogecoin of cryptos right now. It was just popular. It was just cool. I'm not saying Solana is not going to be amazing in the future, but this thing is going to get absolutely wrecked because a bunch of people just bought it for no other reason. It's not like it was new. It's not like there's something crazy. They didn't just have some crazy innovation. They didn't have some partnership. It just all of a sudden was the coin that was breaking out. So careful. Uniswap doing nothing, just going sideways here. It looks, man, I mean, it's hanging on to the 200 exponential for now, but it looks like it wants to break down. Looks like it wants to break down. This, these Uniswaps and these chain links and these, Ethereums, they were just the Solanas from before, the Dogecoins from before. Like, it's literally just musical chairs taking place right now. XRP had a nice little move over the weekend. Nice little 20% pump. Rumor has it that XRP is going to $10. So, I mean, I can't deny it. XRP is probably going to 1,000. Probably going to $1 million, guys. It looks mediocre. It looks better than most. It's above the 200 exponential. It's above the 200 simple. The 8 and 21 have crossed to the upside. Long term, it looks trashy. Short term, it looks better than most of the charts we've looked at today. Doggy Dogecoin. I mean, let's be real here, guys. Dogecoin was the Shiba Inu on the block, and then the real Shiba Inu showed up, and it tore Dogecoin to pieces. Doge is trash now. Nobody even wants it anymore. Probably going to get delisted soon. Shiba Inu, though, I'm telling you what, that's the one. If you want to buy into a shit coin with no fundamental value that will never be worth anything and is not even useful at all and has literally like a gazillion tokens, this is the one for you. Right? I think the supply of Shiba Inu is like a gazillion tokens or something. And then I think like Vitalik Buterin got rid of half of them. So there's only like 500 trillion of them now. So, I mean, what do I even say? Is it going to keep going up? Sure. Is it going to go down? Sure. Is it worth anything? I can for sure tell you that this is not a good investment. If you're buying Shiba Inu, you're not an investor. You're a speculator for sure. Will it continue to go up? Sure. Will it go down? 100% eventually. It will definitely go down sometime, and it may even go up before then. But as far as I'm concerned, we're just putting in a series of lower highs. So if it closes a daily candle above 0.0002797, it probably continues to the upside. Next target for a daily close would be 0.00003473. But let's be real. If you didn't get in before this pump right here, probably not a good idea to get in now. But that's not financial advice. You could just go all in on Shih Tzus or whatever it is. ADA, Cardano, still looks terrible. Below the 8 and 21. It is above the 200 exponential on simple, so it looks better than most cryptos. But let's be real. No one likes you, Cardano. I mean, you're either in a Cardano cult and you love Cardano, or you're just a normal person. So it's one or the other. You're either in the cult or you're not. But it does look better than most. Basic attention token looks bad. Broke back down below the 200 exponential. 200 simple is already rolled over, leaving the bullish control zone now. I mean, this thing looks like it's getting ready to die. It's probably coming down to 57 cents. Yeah. Looks weak. Very, very weak. Oh, Oh, yeah. Okay. So we talked about this one, Phantom, and it literally did exactly what we said. Took out that 166 and then just went parabolic. Almost up to the 1.382, but top basically at 1.236. It went up like $1. It was, I said if it breaks above a $1.65, it's going to go parabolic, and it went up to 245. So, I mean, nice move. Trading pretty technically. Finding some support here. There's not a ton of history on this thing, but honestly, it's probably going to like 270. $2.70, not $270. So calm down. Looks pretty good. So starting to show some weakness. Hanging on to the bearish control zone. Could it come down here first to retest? I mean, realistically, a retest of a $1.66, if that holds, is a phenomenal entry in my opinion. Because you're retesting the breakout, previous all-time high close. You're retesting the 786, of the retrace and the 21. At which point in time that holds, it resets this bullish reset and then continuation up to $2 and whatever I said, 66 cents or 70 cents or whatever. That's the ideal setup and will probably be a trade setup in my own personal portfolio should that occur. Polka dot looks strong. Up here, retesting the previous all-time highs. A little weak. Still above the 8 and 21. Technically in the bullish control zone. It's running into resistance at the red slope line here. This could easily get rejected. But as long as it's above 32.30, still looks good. If it breaks down below that, or if this turns into a rejection and starts getting red histograms, it will not look good. But in all reality, this thing's probably going to new all-time highs. I would not be in the least bit surprised if, let's get some actual targets here in play. Full disclosure, I do still have some polka dot, even though it's by far one of the worst names ever for crypto. Like, how do you take it serious? So, tell me, Charles, where did you make the majority of your financial investments that have left you with so much money and so rich? Oh, I was an early investor in Polkadot. Oh, Polkadot! I've heard of that. What a very serious project and an extraordinary name, Charles. Polkadot, you say? Oh, I just couldn't take it seriously. Really, where did you make your money? Oh, I was an early investor in Pancake Swap, a.k.a. the Cake Crypto. Oh, okay. So you wonder why no one takes any of this shit seriously. I made my money on Shiba Inu. Fucking crypto is such trash. I love it. Okay, so actual target to the upside for Polkadot. Back to the real world. Be serious, man. Quit fucking around. Polkadot's a real serious project. And the fundamentals are strong. And it's the future of finance. So stop making fun of me. Probably going up here. Polkadot, you say? I'll have to look into the fundamentals. The technicals are strong, though, Charles. Polkadot probably is going to $42. If it breaks out from here, $42. If it just hangs out long enough, $42. If it just doesn't die. And then after that, $50. $50 Polkadot. And then you know what? I'm going to get a Polkadot tattoo. Right on my cornhole. I'm going to get a Polkadot tattoo on my booty hole. You won't be able to tell, though. It'll just look like a booty hole. But, alright. Obviously been on this stream a little too long. Matic. Looks weak, man. This thing had some serious potential, but back below the 8 and 21. Breaking down here. Rejected on the bullish control zone. I don't think this one's going to play out. I mean, obviously, at this point in time, it looks like garbage. Bitcoin dominance. Broke back up to our resistance, as we discussed before. Consolidating. This looks like it really wants to burst back to the upside. So maybe that's that Bitcoin breakout to new all-time highs. Again, bullish divergence from the low and the low. From the low and the low, low and the low and the low and low and low and low, bullish divergence. Boom. Pop goes the weasel. 57, bullish divergence. Go. Do it. Do it now. Total market cap. We got that high. We got that lower high. We're at that high again right here. We'll see how this week plays out. Inside the bullish control zone. Back above the slope line. Looks good. Looks like crypto is going to new all-time highs. There's going to be more value ever in the crypto space because of innovation. Oh no, speculation, because of speculation. Sorry, I said that wrong. Coinbase, crossing back to the upside, looks good as long as crypto's going parabolic. You know, Coinbase is like the ugly sister. It's like along for the ride. Like, take your sister with you. Oh, mom, she's so ugly. I don't wanna. Take her. Fine. That's Coinbase, the ugly sister. Hard buy coming out of the bearish control zone. Trading very technically. Probably going to, if it clears 257, it's probably going back to 271. Hood. Robin Hood. Robbing the poor and giving it to the rich. Wait, is that right? Yep, it is. It doesn't look particularly good. Below the 8 and 21. I mean, it's probably going to put in new lows. 36, 37 or 53. I mean, at this point in time, though, yeah, I mean, it's got to get a breakout here. But there's a strong argument. If crypto keeps pumping, Robinhood's probably going to $52. Or do they have Shiba Inu on it? I'll have to look into it. If Robinhood keeps going strong, I think a lot of the investors from Shiba Inu will probably get into Robinhood as well. Because that's where all the dumb money goes. MicroStrategy. Yeah, gonna just waiting for the exit scam. Just counting down for the exit scam. It's like the tether of fake crypto ETFs. It's a scam. Everybody knows it. It just hasn't blown up yet. Looks okay. Hard buy signal, strong, coming off the 200 exponential. Weak because the 200 simple is above the 200 exponential. But Michael Saylor said he will literally come to your house and make you dinner and do butt stuff if you promise not to sell your Bitcoins. Bed Bath & Beyond, still just looking wrecked off that gap fill capitulation. Now it's got a gap back to the upside. So, I mean, $22 at this point in time, that's like a 50% move back to the upside. It's got to buy, it's got to sell. All we need is a buy here for the bullish divergence. Oh, man, there's a trade set up here. If they go bankrupt, though, are they going to mail me some smelly soaps? Do I get some scented soaps from Bed Bath & Beyond? How's that work? I think I'd rather buy their bonds and get a candle or something if they go under. 48% to the upside with an 8% stop loss. Oh my gosh. 6-to-1 risk reward ratio? Are we about to be Bed Bath & Beyond owners, ladies and gentlemen? I think so. Looking fucking good. GME, Game Stonkers. 200 simple is above the 200 exponential. Trying to come out of the bearish control zone right here. I heard GameStop is a viable company. No, it's not. I mean, look, just imagine you're just waiting for new all-time highs in GameStop. Probably not going to happen. AMC. Below the 8 and 21. Hard buy signal coming out of the bearish control zone. Last time we got that signature, it popped up a little and then went to a new low. So maybe it pops up a little and then after that it goes to a new low. AMC, $29. You heard it here first, ladies and gentlemen. $29. And AMC investors will probably still live in their basements, if I had to guess. Newegg looks terrible still. Perfectly touched our 200 simple finally. Hard buy coming out of the bearish control zone. Still below the 8 and 21. Looks like total trash. I mean, it's going to go to $10 eventually. I think it probably pops up before then. But it's just putting in a series of lower highs. Maybe it comes back up to $20. Maybe not. I don't know. But I don't think anyone... I think we're the only person even looking at Newegg stock anymore. This was like an actual company turned meme stock turned nothing, in my opinion. DraftKings looks terrible. Looks like it wants to break down further. Officially in a bear market below 200 exponential and simple. Hard buy signal coming out of the bearish control zone. All these charts look the same. They all look like trash, but have some potential upside before they continue to be trashy. All right. Crypto and meme stocks are finished. Let's look at our commodities. Hooray. Comments are no mercy. Agreed. I could listen to you all day. Shit on Kathy. I mean, I just tell it how it is, bro. I just try to balance out the internet a little bit and do my part. Because everybody else is like sucking on her, fucking begging her for more. And I'm like, more what? Losses? Like, what are you doing? I'm like, at what point in time is the market just going to be real and be like, you know what? Kathy may have just went all in on Bitcoin and Tesla and got lucky, and she's actually a dumbass. Because that's probably the truth. But I mean, you heard it here first. There's like the one guy too who has like a channel. What's his name? Ticker symbol U. And all he does is like suck on Kathy's teat. He's like, I quit my job and now I just talk about ARK Invest. And I'm like, sure, how's your portfolio looking since you quit your job and don't have any income? You just make videos about ARK Invest and try to be bullish on them when all they do is go down. And you're literally just Kathy Wood fanboy. So, man, that sucks. God, that must suck. When you quit your actual job, I think he said he was like an engineer or something. I'm like, how's your income looking since you gave up your job where you made $100,000 a year to make YouTube videos and lose all your money in ARK? Because it's probably not good. Imagine if you just worked your regular job and then didn't make a YouTube channel about ARK Invest and go all in on it. You probably have way more money. You probably have at least 100,000 more dollars. Fucking cults. That's the thing about cults, though. You don't realize until after you drank the Kool-Aid and you're laying on the ground dying that you're like, oh, maybe my mom was right. I think this was a cult. Anyway, speaking of cults, let's talk about gold. Gold below the 200 exponential and simple, clearly in a bear market, definitely a bear market, the most beariest bear market to ever bear. We're below the 200 exponential, we're below the 200 simple. Every time we try to move to the upside, we get rejected. But it's manipulation. If you knew something was manipulated, if I was like, hey, I'm going to manipulate gold to the downside, would you just buy gold and then cry about manipulation? Or would you just not buy gold or sell gold or buy something else? Because that's what I would do. But, I mean, there's manipulation. Yeah, sure, there is manipulation. Because gold is a real thing that eventually people are going to want or are already accumulating currently because one day it's going to go to a ridiculous price. But in the meantime, if you've just been holding gold, you're not making any money. You're actually losing money when you could just be capitalizing on every other thing in existence. Imagine if you just didn't buy gold and you went all in on Shiba Inu coin. And then now you just took your extra like 10x and then you just bought gold with that. That would probably be a good idea. But instead, you just buy gold and then complain about manipulation. It's manipulation. They're taking my buying power because the Shibus and the Inus and Kathy Wood. Yeah, so gold still looks terrible. Looks absolutely terrible. Matter of fact, let's look at a long-term chart right here. Gold is very close to looking so bad it's not even funny. So bad that it might even be scary. So we had a massive bull market above the 200 exponential the whole time. Then we had a little bear market when the 821 crossed. But the whole time, the 200 exponential was above the 200 simple. What's about to happen right here, ladies and gentlemen? The 200 simple is getting ready to cross above the 200 exponential. Not good. Not good. We're now hanging on to the 21 barely. And if that crosses to the downside, we know what that means. We're going to go into another one of these. We're going to go into one of these. 25% and multi-year bear market. And high to low, 34%. So does that mean Peter Schiff is going to be 35% funnier because he just complains about gold? Probably. I can't even wait. I love Peter Schiff. I think he's great. His content's good. I mean, I don't even mind that he's part of the gold cult. I mean, I can only imagine what the investors that invest in Peter Schiff's portfolio look like, especially all those miners out there. But I mean, still though, who cares? He's still entertaining. I like Peter Schiff. He has a lot of good ideas. He's just a little stuck on the whole gold thing. And gold miners, woohoo. He's like, I'm in the stock market. I'm invested in gold miners. How's that working out for you, Peter? Oh, not good. On the monthly, histogram has broken down below the blue slope line. Last time that happened, what happened? Car crash. Yeah, gold, not looking so strong. But only if you look at the daily, the weekly, and the monthly. Only on every chart ever based on technicals does gold look bad. Other than that, it looks good. Actual gold looks good. I like it. It's shiny and it's gold, and that's cool. I like gold. Sure. But technically, not good. Silver trying to reclaim the bottom of that channel that we've been trading sideways in for all of eternity, aka like I don't even know, year at this point in time. I mean, it's there. It's trying to reclaim it. A hard buy signal coming out of the bearish control zone. But again, clearly in a bear market. Clearly in a bear market. Better pray to Peter that this thing doesn't break down. The silver guys are worse than the gold guys. They're like, this is just crazy because the silver makes the things. And how long can they manipulate it for? Arcadian Economics is my favorite one. He lost everything, had to move to Mexico. Now he's just sitting around, not taking showers with a gross mustache, talking about manipulation. The futures and the spot contracts, and I wrote the letter to the people, and then I had to move to New Mexico because of the futures contracts, and I blew out my account, and then the fucking, these guys are retarded. No offense if you're an actual retard. I just mean like, not the real kind. They're like phony. The phone tards, the fake tards. XAG, silver monthly. I mean, look at this thing. It looks like it's coming back down 200 exponential and simple. Look at this, 200 simple on top of the 200 exponential for the first time ever. Well, maybe not ever. The last time it happened was in 1987. And what happened after that? It took a dump forever. It went from 1987 to 2003. So 16 years it took to get back on top. So if that started back here before the push up in 2018, in 2034, we should be looking good, guys, based on historical references. Below the 21 and the 8 is fast approaching. Hard sell signal on the monthly. Bunch of red histograms. Silver looks terrible right now. But we need the silver for the future and the stuff because it's a commodity. And they're just manipulating. Sure, they are. And they're probably going to keep doing it based on the chart. Gold-silver ratio, hard sell. Looks like silver is going to try to gain some value. I think silver might actually pop up compared to gold. Platinum worked out perfectly. This trade was absolutely phenomenal. Obviously, perfect breakout at the 821 cross. Got the measure move set up. Nearly up here to the 8. It's got a little ways to go. But that was 8.5% to the upside, 3% downside move. Potential if it gets up to the 200 simple would be 14.5%. Why did this pop up? Why is all of a sudden platinum going up? Well, it's been selling off forever, one. And then two, because hashtag mint the coin. Mint the coin with the platinum. And then everybody, because the platinum and then the $1 trillion and then no more debts. Right? It's like that scene from, what was that? Happy Gilmore? Is that Happy Gilmore? No, the one where he goes back to school with Adam Sandler and he gets up on the stage. Billy Madison. And he does like the speech and he talks about like the little duck that could or whatever. And then at the end, they're like, sir, that was by far the stupidest thing I have ever heard anyone say. Not only did that make absolutely no sense at all, but we were all stupider after having listened to that. That's what these people sound like. Mint the coin, hashtag mint it. I'm about to get out of here. I'm rushing through the rest of these. I think I'm drunk on these fucking... Somehow I'm intoxicated off like the idiocracy of the world. People are so stupid that I'm under the influence. Hard buy signal on AG. First Majestic at resistance. These things are probably putting in some kind of temporary bottom, but this thing has just confirmed a bear market on the daily. Oh, man. These juniors are terrible. SILJ, same thing. Trying to get up here. It's got to at least cross the 821 back to the upside. And then I think it pops up. But even that, man, these things look terrible. USAS, same thing. Probably bottoming out here at the previous support on the macro, at least temporarily. But again, this thing has just been bleeding out. Throat slit. I'm all in on miners. I am broke now. I blew out my account. Tilray, pot stocks, breaking down new lows, putting in a little bit of bullish divergence here, a little potential. Is the pot stock sector bottoming? 200 simple is about to roll over. Looks bad. Man, these pot stocks are rough. Looks bad. This was our zone though. For the macro, 1 through 5, this was it. If we break down below this blue line, which is literally where we're at right now, if we break down below 1038, I'm sorry, $2. Shit. If we break down below $10.38 on like the weekly or monthly, it's basically going to invalidate this 5-wave structure. And we are not going to be getting this crazy move to the upside, at least based on, Elliott wave. So it probably is bottoming, hopefully, maybe. We'll see. I mean, if there's one underperformer sector in existence right now, it is definitely pot stocks. So could this be it? ACB showing some strength off that miss on earnings. Good job. 144% miss on earnings. Been going up since then. At resistance right now. A break above resistance could take it back up to 200 exponential and symbol at $8.77. Is it going to happen? Probably not. But it could. Man, these pot stocks look terrible. But there's definitely some potential out there. I mean, you could argue that a dabble in pot stocks at these prices is probably not a bad idea. You could argue that. But at the same time, you could just buy some pot and smoke that. And at least at the end, you'd be high. CGC looks terrible. Looks absolutely terrible. Probably going to come down here to 941. I mean, but maybe comes up to 21. I don't know. It's so much pressure to the downside on these things. When we go to the longer time frames, I should have done it for the other pot stocks, but I am honestly exhausted. I mean, we're at those levels where this thing could be turning around. But we got to see some kind of life on like the weekly chart first. Even the monthly chart, the 821 have crossed back to downside. This is scary right here because this previous close, if we zoom in here, this previous close at 1375 is the lowest close ever since it peaked. And we're now lower than like 2017 closes. So we have a low, then a lower high, and now a lower low again. Best case scenario, this thing puts in some monthly bullish divergence. Best case scenario. But, it still hasn't even put in a green histogram. But maybe. But then even at that point in time, you're like, oh, is it just going to be a giant descending triangle that goes straight to zero? Maybe. I don't know. I'm pulling for you, pot stocks. One day. URA. Let's look at some uranium. URA bouncing the resistance here. Is it going to turn into support, or is this just going to break back down? I think, honestly, I think these things are overvalued still. I really hate to say it, but getting the hard buy potentially here on our next candle. Bunch of red histograms broke down below the blue slope line. If it holds right here, it's probably going to new highs. If it breaks down from here, it's probably going to $20. UEC, same thing. If it holds right here, man, it looks less bullish. It's probably going to like $2.44. CCJ, if this one holds here, probably going to new highs. Again, it's trying, but it looks weak. These things just got overbought. It's like the meme stocks of yellow energy. URNM, again, bearish control zone, bunch of red histograms. Looks like it's about to get the 821 cross. I would expect some kind of support at like $71, but it's just going to look like a breakdown from support. That's a gap fill back to 71, but realistically, I mean, this thing probably goes to like $60 or something. Again, uranium doesn't normally move, and by the time it's moving like this and everybody's on board, it's probably too late. We were talking about uranium, a year or two ago, and now everyone's talking about uranium, so that's probably the top because nobody was talking about it before. Copper, looks very toppy. This thing looks like it wants to let go. It could easily get a little more upside. This is CPER, the index, but, I'm all about that physical copper. I just load up. I got my pockets full of pennies, ladies and gentlemen. No, seriously, though. Yeah, this looks terrible. And what does this say? If copper is like the building block of everything, because we need it to like lay massive wires for energy infrastructure. We need it to like, you know, move water to places. We need it for like all kinds of industrial purposes to like industrialize the world. And all of a sudden, China, the biggest copper importer in like the entire world, is not buying it. And all of a sudden it's, you know, potentially going to be breaking down from support. What does that say about the future and the future of infrastructure and the future of like, you know, expansion of the world slash like, you know, probably going to be some deflation. Probably fits into the big picture that if some of these commodities start topping out and breaking down, especially copper, steel, a lot of these like industrial metals, probably means that the world is not a pretty place. Lithium looks weak here. Looks like it wants to break down. I would expect support around like 70, 72 bucks. This LIT ETF. Hydrogen broke down to new lows, retesting the low as resistance now. I think it gets continuation to the downside. Looks like it wants to push up here. It's at resistance though. Could just potentially put in a lower high. Again, not really tradable at this point in time. Lumber getting that next little push up. Again, looks very good. We got the first 38%, had a slight pullback. Looks like we're coming up here to fill this out and finish off this trade setup. But again, what does this look like? A giant head and shoulders potentially developing? What does this say about the world if lumber tops out here and breaks back down off a rejection of the 200 exponential and simple and goes into a elongated bear market? Probably not a good thing for like, you know, the future and stuff. But we are technically hanging on to the 200 exponential and simple on the weekly here. We are getting a hard buy coming out of the bearish control zone. Bunch of green histograms. Reclaiming the 8. Finding resistance at the 21. If we start closing weekly candles back on top of this, I think we push back up. But got to be real careful here. This just looks like on the monthly, a retest of the 821. We'll see where this monthly closes. If it closes below 700, it's probably going to come down here to like 400. Which would be, you know, potentially that break of the head and shoulders. You know, the measure move obviously much lower. 307. Does it get there? I don't know. But on the monthly, hard sell signal, all red histograms. It doesn't look good. Does not look good. So if you got wood now, I want to use it before you lose it. If you know what I'm saying. Wink, wink. What are you talking about, you weirdo? Caterpillar. Cat breaking down below 200 exponential and simple. You know, trying to push back up here to retest these. Looks weak. Nothing has changed. I'm rushing through the rest of these. I'm exhausted. Deer, slightly stronger off the 200 exponential. You know, finding resistance between the two. If we get back on top of like 350, it's probably going to revisit the top of the range, like 380. 10% move, potentially. Looks a little stronger. AM, Antero Midstream Capital. Looks good, breaking out. Not new all-time highs, but new cycle highs. 200 exponential gets back above 200 simple. I'll be extremely bullish on this again. It definitely needs to cool down, though. I mean, it did get a little cool down here, but like shorter term, like on the daily again, it looks like it's ready for a little cool off. But it looks good. As long as this area holds, I think it keeps creeping up. Cemex, it looks like it's about to let go here. Below 200 exponential now. 200 simple on top here, rolling over. I think it's going to come back up. But at this point in time now, I think realistically anything above $7 is probably like an exit. And this is going to really look like a topping pattern, like an atom top rolling over, or an eve rather. CLF. Again, if we see like these steel, iron ore producers and stuff breaking down from here, what's that saying about the economy? Like copper, you know, all these things. And it's important to differentiate between these commodities. What are things that people need that's a commodity? Beef, pork, coffee, soybeans. What are things that people don't need that's a commodity? Copper, steel, like some of these other like industrial ones, some of the metals, like some of the stuff like that. They're for like expansionary phases, as where if we go into a legitimate recession or depression where people want like food and resources like that are consumable but necessity, as where like these are for like economic expansion type resources. So very important we pay attention to and differentiate between them. This thing's just playing out as expected. Finding support at 200 exponential and simple. Finding resistance right here at like that $20 to $1 range. Eventually, I think it gets down here like $15. But, this isn't going anywhere long term. But I think we'll get it at lower prices. Forward, lower high as of now. Going off of like a lot of like fundamental type news. But I really think this is just going to be a lower high top. Long term, I think Ford will actually do well. I think it was intelligent of them to close some of these plants and stuff, but I think they're just going to keep missing on like earnings and stuff. Like, I really just don't think these car companies are going to do well. There's a lot of headwinds, a bunch of pulled forward demand, lack of supply because of chips and stuff. And you know what? While we're on it, General Motors next, let's talk about something. Another like inflation FUD that I nonstop hear about people saying is, the average price that Ford sells a vehicle for is up to $50,000. The average price that GM sells a vehicle is up to $50,000. Everything's going up. Cars are going to be so much more in the future. It's driving up used car prices, and every car is going to cost so much. Next year it's going to be $60,000, then $75,000, then it's going to be $100,000 for a car. Okay, let's think about this. If you literally have a bunch of cars that use the same part, whether it's a semiconductor or whatever, the transmission, like the whatever it is, and you only have so many of those parts, are you going to make your shittiest, cheapest car and put the parts in that? Or are you going to make only your top line, most expensive car and put your semiconductors in that and then sell those because you know that there's maximum amount of supply and then a bunch of demand? You're going to make your most expensive, premium, highest quality models that you can make, and you're going to make the most of those you can because the profit margin's the highest on those. You're not going to make your baseline Ford Festivas and pump those out so everybody can get a brand new Festiva. No, you're going to make that fucking, that Cadillac Escalade of Fords. You're going to make that top level stuff. All other things considered. So that's why the prices look so much higher. General Motors, same thing. Hanging on to the 200 exponential and simple. Getting a bounce up here. Really wants to take out this $65. If it does, it's going to look a lot better, but I just don't see it happening, really. Hasbro broke down. Bear market officially, as expected. Last bear market was pretty detrimental. That was obviously the CVD dump right there, but starting to let go. And we're seeing more and more of this. So what does that tell you? We're seeing more and more stocks looking terrible. Works back below the 200 exponential and simple. I think this thing's going back down. Does not look good. There'll be a scalp in there sometime. Trying to save price action right here, but we got to get this thing closer to the 200 exponential or simple. It's had too much of a move to the upside to take a momentum play. It's definitely like showing some serious weakness here. I was surprised to see this cross back to the upside. So, but this is a meme stock anyway. Walmart, what does that tell you about the economy? This is America right here, below the 200 exponential and simple, officially entering into a bear market. We saved it here, that breakdown, back up, same high, double top. And now we're rolling back over. Looks like trouble. Hard buy signal, though. So do we push back up here and find some resistance around like 145? Probably. WMC, Western Asset Mortgage, blah, 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 blah. Hard buy signal. This was that potential entry area for a retest, 18%, 6% downside, 3-to-1 risk-reward ratio off of triple bullish divergence. Momentum technically picking up right here. If this 821 crosses to the upside, I think it's going to shoot straight up to 275. And then $3 is probably right around the corner. But if it lets go, keep them stops toss and them dollars close. Stops tight, dollars close. MGM, last but not least, breaking out new highs, consolidating at this level. If it hangs out here long enough, it goes higher. It is showing a little weakness in momentum, though, with that 200 simple. But overall, looking pretty good. Breaking out. Looks good. We did it. We made it to the end. Hooray. Congratulations. If you're still here right now, congratulations. You made it. Yay. Appreciate everybody that showed up today for the stream. Hope y'all enjoyed it. Hopefully we didn't miss anything. If we did, I will get it on next stream, or I'll get it in the group for private members. What else? If you want to join the group, get the sweet indicator that I use for free. Feel free to hit me up, and you can do so. Only if you're going to actually participate, though. I think some people might have died of COVID or something. I don't know. No, I'm just messing around. Congratulations to the one and only, I'm not going to say your name, but for your new little marriage deal. Hopefully you enjoyed your honeymoon, my man. Sound like you did. And yeah, new members, appreciate you as well. Definitely be doing something in there. I have a new little segment I'm going to be putting out for you guys too. 10 under 10. 10, well, I'll talk about it later. I'm not going to get into it right now, but yeah. So that's it for today. Our Wednesday, 10/10/2021 market look ahead live stream. Sunday, 10:30 p.m. About to make some dinner, chill out. Hopefully everybody had a good evening. This should be a good week in the markets. Definitely some serious opportunity poking its head around. And we're looking at some serious potential reversals in some of these sectors and markets as well. Definitely going to be a good week, good month. Looking for that big trend, that end of year trend. Something is going to take off for the next 3 months as people look for a place to make their capital. And if let's be real, if it ends up being treasury yields and the DXY, it's probably not going to be good for, stocks and cryptos, and obviously not like bonds and stuff like that. But alternatively, if those two cool down, if yields chill out a little bit, if the DXY chills out a little bit, maybe it's crypto. Crypto explodes. Bitcoin new all-time highs. Crypto circle jerk back in full effect. Shiba Inu, is it the future? Huh? XRP taking over the banking system? Cardano? No, Cardano shit. But yeah, that's it for today, guys. Appreciate everybody tuning in. Thank you for smashing up the likes. Share it with your friends, your enemies, whoever, anybody that thinks it's funny. Also, appreciate you guys for tuning in to the end. I will see you all on Wednesday, 8 p.m. Eastern Standard Time for our midweek market update. I am Crypto Trend Trader, and I'm out of here.